All right, guys. So today we got Tesla earnings. What's up, chat? What's up, Kay, Girth, Tim? What's up, team? Let's get some music playing here. All right, guys. Let me know if you can hear the music playing. They shouldn't be playing yet. They should be playing right now. Let me know if you can hear it. You should be able to hear it, I think. All right, guys. So yeah, Tesla, big green day. Market activity since the opening bell. Very red day to start the day in pre-market. The market has blown back up to 415. Tesla has ripped all the way back up to 180s ahead of their earnings report today. And so it really should be a pretty big day in the market. You can kind of see Tesla rip. Let me know if you guys are ready for this. But yeah, it should be a pretty good market day. Let me know if you can hear the music as well. We got a new layout that I'm about to add to this right now. So check this out. This should be good. No, that's not it either. There we go. That's better, I think, right? Let's get rid of this one. I want to delete this. Let's see if we can delete it. Discard changes. I like this one better. Let me know if this one works. I think this screen is a lot smoother. But it's a big day here, guys. A big day. Tesla ripping up. SPY pushing up to 414.75. Tesla at 183.30s here. You should be able to hear the music. Let me know. Let me get a poll going right here. We're also going to do a Twitter poll. We're going to send out a newsletter. Are you bullish or bearish on Tesla Q1 earnings? Vote on the poll, bull or bear. We got that poll live. Tesla ripping up, guys, at 183s right now. Just huge moves. I need y'all to do me a favor. Remind me when that's better. Remind me when before the earnings call starts. The actual earnings are released at 4 p.m. Eastern Standard Time. So scheduled for 4:05 Eastern Standard Time. this up so you guys can actually see it. Beth, I'm back to 25 cents or to $1. I don't know, man. What's up, DJ? Very good sign for the market. Recovery was so fast. Yeah, for sure. All right, guys. I'm ready. Again, let me know what you guys think. Yeah, we can do a countdown. I got you. We can do a countdown here. All right, so the numbers come out in about 40 minutes. We'll call it 45 minutes, to be honest, because I think they drop. I think they drop at 4:04, 4:05. So we'll call it 45 minutes. But yeah, there's the countdown timer. And Tesla has been, again, just flying up here. Big moves. I'm bullish, but I know a lot of people are speculating that we're not going to have such a good earnings report this time. All right, so we're getting things ready. All right, so we're going to do a poll on Twitter as well. And then we're going to make the options neutral, beat, or miss. But on this poll, we got going to make it just an hour long. And then we're going to post. Y'all do me a favor, bump the like button if you haven't yet. We appreciate it. It certainly helps. All right, so yeah. Quarter one earnings, guys. Let me know if you think of their beat or miss. Honestly, it's pushed up a lot. It's right underneath the previous closing price. Again, vote on this poll. We got this poll live just now. Opposite public sentiment. FRC is up. Yeah, I heard FRC ran. To be honest, guys, I did hear it ran today, and it did ran. Look at it did run. FRC with a huge move up today, man. I mean, it's down so much. Like, to put it into perspective, here's a yearly chart. So I mean, it's still down. It's gone from $120 to $15. So I mean, it has dropped huge percentages, basically 80%. So that's a big percentage, to be honest. Dropped 80% relative to where it was. So, I mean, it's still down a lot, but it's got a chance to come back. Again, if we look at the expectational numbers here, let's take a look at these. So we do have some expectational numbers that we can glance at today. Expectationals for Tesla today are for 84-cent EPS on 23.37. 23.37 on 84-cent EPS. So we'll add that to this here so you can see it. Again, 84 cents. $23.37 billion. Let me make sure that's right. Yeah, 23.37 and 84. And there's the full list right there, so you can see it. You get Tesla bumping up big here. It's at 183.50s here, 183.50s. I think we ended green today. Let me make sure. I don't know. So what did we buy this morning? We bought Morgan Stanley. How did it do? Should we have held that one? I think we probably should have held that one. Yeah. Morgan Stanley rebounded all the way back up. Another dip buy that worked. We were just a little bit early, man. I got to be more patient with these because honestly, they work. Again, remember we bought Morgan Stanley. I should have held. We made 50, 60 bucks from the last trade we got into on it. But if I would have held, man, I would have made so much more. Tesla finally pulling back here, guys. So we got 40 minutes. Hey, what's up, Ricky? What's up, V? I feel like buying it if it dumps. Maybe. Okay, got about 100 people here. Anybody watch the Financial Services Committee hearing? Market slumped a little bit. So we are in a little bitty trade today. You can see we're up about 120 on the day so far, 130. I'm actually short right now. I'm going to go ahead and cover that. And yeah, there we go. So you can see I'm up about 170 on Top Step. Not too bad here. We're not going to push too hard. We only got about 30 minutes until the closing bell. What's up, Jose? What's up? Why companies sell you puts? Because most people lose. They wouldn't run unprofitable business. I mean, people sell puts, not the companies itself, unless they're warrants. But yeah, I think it varies. Our market's slumping a little bit. Let's get ready, guys. We got 30 minutes here, 30 minutes. Again, Tesla finally had a pullback. We shorted, but FRC still down so much. But I think there's probably a good little dip buy to get involved. It kind of plays into my extended blue chip dip buy strategy. That's just powerful. It just works really well. Apple, we're looking at tech. Apple's ripping up big today. There's the SPY itself. We can look at the Q maybe. A little bit more tech heavy. Q is very green today too, up to almost 320. SPY basically hit 414s. 415 today. Got a decent amount of votes already on Twitter regarding Tesla earnings. 50% think they're going to beat, 46% think they're going to miss, and about 3.8% think they're going to come in neutrally here. So we'll see. We'll see what they pull off. But yeah, interesting to see what happens with Tesla. I'm going to send our newsletter out, guys. Market's pulling back. Been in an uptrend, though, to be honest. A very strong day today. Okay, yeah, so getting ready to send the email newsletter for Tesla out. Again, we'll look at the macro trends graph in a second. The numbers come out pretty soon. Again, hit that like button. Let's try to boost over 100 likes if we can ahead of this. Update this, replace the image. There we go, Tesla. Link. A little dip here. I mean, if the trend continues, maybe this dip will hold. I'm not sure. All right, so we got a little pullback here. I guess the question is, does the trend hold or does it continue back up? Well, dude, I drank coffee a little bit late in the day. Honestly, now my stomach is all like out of whack. Go ahead and send this newsletter out now. Got a little pullback here. Let me know if you're buying the dip, guys. Should I sell 100 shares just in case it tanks? I mean, that's completely up to you, brother. I don't know. Again, the numbers drop pretty soon, though. So we got 34, 35 minutes left until the numbers come out. Whatever you want to do, man, I have no idea what Tesla's going to do. I hope it goes up. Nobody knows what it's going to do. Anybody claiming to know what it's going to do is full of it. All right, so a pretty large pullback on Tesla here. We got to pull back in the market itself too, so it just depends on whether the market's going to keep it up. All right, guys. So, whoa, dude. So here's a really interesting thing here, guys. So I just asked Google Bard. Does Tesla beat or miss Q1 earnings today? Google Bard says Tesla beat analyst expectations for EPS in the first quarter of 23, but missed on revenue. The company reported EPS of 86 cents per share, which is higher than the 84-cent estimate. Revenue came in at 23.56 billion, below the consensus estimate of 23.74 billion. So, but I think this is actually just looking at first the earnings that were reported in January. So yeah, in January they had mixed results. They beat on EPS, missed on sales, and we'll see if we get that on this quarter too. Hey, what's up, Pawn? What's up, Daniel? Hi, John. What do you think about Bed Bath & Beyond? I think it's completely subjective about whether you want to take a momentum trade based off of it. I would just be careful holding it, long term, because I don't think it really has a successful business model that'll do well long term. I think there's too much risk long term in that regard. I got a little pullback here. We got the Q riding the 200 EMA. Riding the 200 EMA. I don't think it's making up a story. I think it's just reporting. I think I asked it about Tesla Q1 earnings, and it's looking back at the quarter. Is essentially what it's doing. I was like, that's all it's doing here. Is it's just looking back. It's looking back on the quarter. Is all it is, I think. Still getting another pullback. Yeah, kind of a crazy day. Tesla bounced from the moving averages. Yeah, you can see the 200 EMA right here. So here's the 200 EMA right there. So again, we'll see what we got in terms of movement today from earnings. Again, looking at our poll numbers, we did a couple polls here. 57% are bullish, 43% are bearish. So, all right, we'll see. So you can see the pullback to the 200 EMA. We'll see if we pop there. Sell? All right, we'll see. I have to go grab my other coffee cup. I know I grabbed a coffee mug here. SPY pull it back down, and part of me wants to buy the dip. We'll see, though, if I do or not. Buying the dip. Yeah, I don't know if we're going to bounce at the dip. It just depends on the market. I think over time, the market's not going to, you know, it just depends, man. It really depends on what we got going on. On our Twitter poll here, 44% say beat, 46.5% say miss, 9.3% say neutral here. Let's check this out. If the NQ pops after hours short the pop, I don't know, man. Buy the dip. Didn't you tell everybody that the market was going to drop today, though, Ben, in pre-market today? Again, I don't know for sure. I can check back, though. Y'all should be able to hear. All right, so we did break under the 200 EMA. Again, there's no guarantee it's ever going to hold. You don't ever know when it's going to hold. Big movements up, though. All right, guys. about 30 minutes or so. We got about 25 minutes actually until the numbers come out. We'll see if 182 holds. 182 might be a specific level we can pay attention to. Yeah, I mean, I made money in futures. We're down a little bit in stocks. Again, this is our futures profit today. We were up about 170, so not too bad. About three profit win loss ratio is about 3 to 1. Drawdown's only about $60. We made about 170, so about 3x our drawdown, so that's nice. All right, SPY pulling back. Let's see if the 414 level holds on the SPY. I think 414 is like a good spot to watch to see if that holds on the SPY. 414, very specific level, very useful level if it holds. So again, we'll see. All right, guys. All right, so consolidating over that 182 level, which I think could be some support in the market here. Is there anything else you guys would want to see in terms of like chart? Golden pocket strategies? No, not usually. I'm usually just riding trends. Trend strategies is mostly what I use, just trends and breakdowns. All right, so back over the 200 EMA. Q bouncing at the 200 EMA. I pull it back to the 200 EMA now. You can see the Q, which is tech heavy, is bouncing at the 200 EMA right here. You can see that bounce right there. Putting above 103.30 on Amazon. Yeah, Amazon ripped up at the opening bell today. It's one of the reasons the market flew up is because Amazon really initially is the one. Like if you look at the market initially was pretty choppy at the opening bell. Amazon was the one that kind of flew up ahead of everything else, to be honest. What are the expectations? They might be right underneath me, like right here. I'm not saying they are, but they could be in this general area on the screen right now, guys. Might be. It could say it like right there. Just a weatherman it like right over here, you know, over this area. CBC poll, 54% sell off. Yeah, all good, Andy. I'm just kind of messing with you, brother. It's all good, dude. Q, the only thing you need to trade today, easy. Yeah, the Q's been riding the 200 EMA all day, guys. This is one of the reasons, like, people ask me all the time. They're like, hey, John, like, what's your favorite moving average? What indicators, trend indicators, like moving averages do you like using? I tell them every time, like, I use the volume weighted average price and the 200 exponential moving average. Those are the only two things I use. Anything shorter term is very fake out heavy. It's just really fake out heavy. And these are like, again, when you think about technicals and why they work. Okay. Let me see. Um, CBC poll, 54% sell off. All right, guys. So Q break it down, Tesla break it down, and this is going to be a pretty big sign, especially like when you look at the Q here. The previous closing price is right there at 318.80s, and the market's breaking underneath that. Many institutions use 200 moving average or EMA to buy the dip on stocks that are uptrending. Yeah, for sure. The 200 EMA is in the volume weighted average price. So the two kind of milestone levels. All right, so getting a pretty large breakdown of the volume weighted average price that though. All right, so here's the volume weighted average price pullback on Tesla. Let's see if this level, gives us a bounce. All right, guys. All right, guys. Got a little bounce. So this is why we watch the 200 EMA is because if it doesn't bounce at the 200 EMA bounce, this is why we watch the volume weighted average price because if it doesn't bounce there, if it doesn't bounce at the 200 EMA, a lot of the time it's going to bounce. Right, so we are bouncing out a little bit here. Let's see if we hold the volume weighted average price. Big crucial level here. We're also going to start looking at the macro trends here. Yeah, FRC earnings next week as well. Maybe a buyback announcement. A buyback announcement would be great for them, to be honest here. All right, so we are holding right around the VWAP here. Again, Tesla ripped up big, but starting to get a pretty big pullback. All right, so we are underneath the volume weighted average price. All right, so we are dumping underneath the VWAP here. We can zoom out and see that Tesla has had a very strong day leading up to this, a very strong day, starting to give it back. I mean, what I will clarify is that it's had a strong day after the market opened. Prior to this, Tesla actually dumped down pretty heavy leading into this. So yeah. All right. All right, so big dump here on Tesla here. And this is ahead of the earnings report, which is in about 15 or so minutes here. Yeah, so again, some people like to say, stocks take the stairs up and then the elevator down. Here's the elevator down. Here's the stair step. If you want to know why they call it that and why that's kind of a common saying in the market, is because here's the stairs right now. So stair step up, here's the elevator back down. And so that is why that saying is, truthful sometimes, is because, again, when markets fall, they can fall quick. So just be careful, guys. Be safe. All right, starting to bounce back, though, on the Q itself. So the Q started to pop back up. And again, let's look at a few other things here. So let's look at the macro trend. Let's look at Tesla EPS graph. All right, so this is what I like. I always like using macro trends because macro trends can just be useful. It just works, like to analyze like upcoming earnings to see like what we're really looking like right now with regards to earnings. So here's Tesla on the left side here. So this is the chart we're looking at. And again, we'll put this up so you guys can see it. Let me put the other banner up. There we go. But this is why we look at it. Okay, so again, if we look at their EPS graph, here's the trailing 12 months. So they're trailing, like on a yearly perspective, Tesla's incredibly strong. Even on a quarterly perspective, here is the last, 1, 2, 3, 4, 5, 6 quarters are right here. So the last 6 quarters, the last year is 95 cents, 65 cents, 95 cents, 107. So in terms of PE, it doesn't look like it's too bad here. That's about, let's calculate this. They're trailing 12 months. So that's about 2 is 362. So what's the PE ratio for Tesla right now? So the way you'd calculate it is you go 180 divided by 362, and you're going to get the PE ratio. PE ratio is about 49.50 if you round up. Not a great PE ratio, not necessarily a terrible one. And again, EPS is profitability. So this is looking at how profitable Tesla ultimately has been over the last couple quarters. And again, on a quarterly perspective, uh, Tesla's doing pretty good. Even on a yearly perspective, it looks even better. But you can see this is their EPS graph. Right now, they are expecting 84 cents. And so their expectational number is going to be somewhere around here. So like it'll look like this. If they do as expected, this will look right around there. So it'll move up to about right there. Let me do that a little bit better. So yeah, it'll be about right here if they come in as expected. Again, if they do better than, if somehow they do over 107, of course, then it'll look better than that. So that's EPS, which is profitability, basically margin. Is what EPS is. So EPS is essentially margin. Now, we don't want to look at just margin, though. We want to look at their ceiling, if that makes sense, right? So we want to look at their revenue graph as well. And again, I like using macro trends for this exact reason. They put this up in a very understandable way. Again, here's the trailing 12-month revenue graph. Last time they came in at 81.46 billion in revenue, 81.46 billion. Tesla's still dipping down to 180 as well as we speak. But again, Tesla right now is expecting 23.37 billion in revenue. Okay, this must be their 12-month average. Okay, yeah. So what Tesla is now expecting on a quarterly perspective is 23.37. All right, so they're expecting a little bit lesser than last time at 23.37. But it's going to be, if they hit 23.37, it will be their second largest revenue quarter ever. A little bit less than prior, but still pretty solid. All right, so that's what Tesla's expecting here. And again, let me know if we're going to hit or miss. You see the Q and the SPY are bouncing at the volume weighted average price. Tesla has dipped down pretty substantially leading into this. And again, we do have a couple minutes before these numbers come out. Again, let me know what you guys think. What's up, Rex, Ad, Hustle, Milton, Mike, Pawn, Jeff, Grape, V, Rocket, Prince. Well, it didn't ride VWAP until close. It actually broke pretty heavily under volume weighted average price here. All right, and again, let me know what you guys think here regarding Tesla here. I'm gonna go grab my coffee in a second, but yeah, the numbers drop in about 8 minutes, guys. 8 minutes before the numbers come out. They could always release it early. We got less than, we got about 3 minutes until the actual earnings numbers drop. So yeah. What's up, Shepard? What's up, Mads? Tesla weekly chart. Well, yeah, weekly chart looks a little rough relative to where it was, but a lot of stuff, almost everything's been dropping since 21. You look at the SPY or the Q, for instance, here. Like, here's a weekly chart on the Q. So almost everything's been dropping since 2021. Here's 2021 as well. And so, I mean, again, Elon Musk once said, and I certainly agree with him in that regard, that that if you want to look how strong a company is, see how it's performing when the market is weak. And so my point is like, yeah, Tesla looks weak on a weekly chart, pun intended, I guess. But the market itself, the Q, all tech looks weak. If you look at the SPY on a weekly chart as well, it's going to be the same thing. Because again, everything kind of started the bear market that we're in late 21, early 22. So, and that's kind of when Tesla started to dip as well. So again, we'll see. Tech, the market itself is bouncing up. It's at 414s right now. And if we look at Tesla here, we're over 180, bouncing right at that 180 level here. Y'all be safe. Again, y'all be safe. I'm going to switch to my other working headphones here. Turn this off. We're going to stop this screen and we're going to show you. There we go. All right, guys, 1 minute before the closing bell here. We'll see how the markets perform closer, around the open here. But we got a little pullback ahead of this. We do have a dip now leading into this. SPY down but starting to rebound a little bit stronger than the Q itself. For instance, Amazon pulling back a little bit with Tesla too. So tech starting to pull back some right around the closing bell. We got about a minute left. Again, Tesla is actually scheduled to release their numbers at 4:05 p.m. 4:05 p.m. So technically, they're scheduled to release it a little bit after the close, about 5 minutes after. But you don't really know when Tesla's going to unleash their numbers here. We got a lot of different sources up, so we're prepared to watch to see what we get in that regard. But yeah, we got some sources up. We're ready here. Let me know what you guys think. Company announced more price cuts ahead of this, starting to bounce up a little bit here. So now we're scheduled for about 5 minutes. But be ready. All right, 10 seconds before the close. The SPY's starting to rip up a little bit. SPY's starting to move up some too. Again, do me a favor. Hit the like button if you haven't already. Bump that number up. We got less than 100 here. You can do better than that, guys. Bump that like number up. Bring it up to about 100 at least. We need 30 more to hit 100. Do it now. All right, there's the closing bell here, guys. And again, Tesla is scheduled to release theirs 5 minutes after the close, right? So they're not dropping yet. It's not out yet. The market is closed now. The SPY is at 414s here, 414s. Again, hit the like button if you haven't yet. We appreciate it. Waiting for the numbers to come out again. It's supposed to drop at 4:05 p.m. So we still got the timer at the top left. Be ready. SPY dipping down a little bit. Here's Tesla, though. Hasn't really budged since the close yet, so that way you know the earnings actually aren't out yet. When you see this thing start to swing, that's when you know the earnings are out, and nothing yet. Let's see what happens, guys. Tesla's starting to swing a little bit. It is moving some. SPY moving down. At 3.5 minutes, guys. 3.5 minutes. Mark is moving down, though. Wait patiently here, guys. Can y'all hear the music? You should be able to. All right, guys. Here we go. Hey, good luck, Pawn. I hope you kill it, man. I hope you make some money, bro. All right, guys. Tesla earnings. They should be dropping sometime in the next 3.5 minutes. 3.5 minutes. Be ready. We're hyping up the earnings. Let's see if we do well here. Tesla not moving much yet. Up to 180.50s here. Pretty sideways so far, but the earnings aren't out yet. When earnings are released, we will get big volatility. We are also going to throw this bad boy in sub-only mode. So if you have not already, don't be stingy. Hit the subscribe button, guys. You know you want to. Do it now. Hit that subscribe button. Support the channel. All we post is free content. We have no paywalls behind our content. We don't sell anything. We don't charge for anything. We don't claim to be experts. We don't act like gurus. Tesla making a move up to 181s right now. Huge pop-up. Tesla earnings are almost certainly out. They are up to 181.50s here, 181.50s. Bear with me. We are pulling up our numbers and stats here. Let me check Twitter. Maybe they're not out. I mean, this isn't the biggest move yet. All right, nothing out yet. Everybody's still waiting. Big pop up ahead of the close, though, or ahead of the earnings report here. Nothing out yet, though. Very strong move all the way back up to the 200 EMA. What else was dropping their numbers today? That could have something to do with it. Let me see what else we had dropping today. Big moves up to 182s right now. Yeah, be careful. This is a big move. SPY's starting to move up a little bit of a delayed response there, but starting to move. Again, announce yourself. Show us you're subscribed if you haven't yet, guys. We appreciate it. Hey, thank you, Robert. I appreciate it, man. All right, Tesla bumping up more, guys. 182s. Big volatility showing up all of a sudden. It looks like the earnings are probably out unless somebody's dumping it here. But I don't know. Very volatile candle here. Looks like the earnings are released. Don't see anything yet, but a big turn at 179s right now. All right, Tesla EPS in line with estimates, sales beat expectations. EPS in line with estimates at 85 cents. Sales came in at 23.33 billion, beat the 23.929 billion estimates. Numbers are out. We'll put the numbers up on screen, but they had neutral EPS beat on sales, neutral EPS beat on sales, higher than expected sales revenue, inline EPS, and they are bumping up right now. Again, higher than expected sales revenue, inline EPS. Again, 85 cent, in line with estimates. Not liking this move, though. All right, starting to turn a little bit down to 178s. Very volatile, though, kind of going back and forth here. Let's see if it pops back up. I don't see guidance yet. We're waiting for guidance numbers, but EPS was neutral. Sales beat expectations. Sales came in at 23.29 billion. Starting to head back up. Tapped 180 right now. Again, we'll see if we can report the guidance when we get it. Just trying to hold. Up to 179.50s. Back up to 180s here. So again, 85 cent EPS in line with estimates. Revenue of 23.33 billion. Testing the low of pre-market or after hours right now at 177. Tesla first quarter production is up to 448,808, up 44% year over year. We're going to put these numbers up on screen right now. You can find all the numbers in chat. Again, total production for the first quarter is up to 440,808, up 44%. First quarter deliveries is up to 422,875, up 36% year over year. Again, dropping all these numbers in chat right now. So first quarter deliveries and total production are up roughly 40% on both of them year over year. Tesla with that just broke the lows of extended hours, starting to dip down a little bit now. SPY up to 414s, 413s. Energy storage deployments increased 360% year over year in the first quarter to 3.9 gigawatts per hour. First quarter net revenue was 2.5 billion. You know this number up on screen here. We rebounded a little bit from the lows, starting to bounce back some. They also put out something for 2023. We expect to remain ahead of the long-term 50% CAGR with around 1.8 million cars for the year. 1.8 million cars for the year. Trying to dip down a little bit at 177.80s, guys. 177.80s. Again, adjusted EPS came in at 85 cents. First quarter EPS was 73 cents a share. Tesla says they expect our pricing will continue to evolve. We're going to put these numbers up on screen as well. You can find most of these numbers in the chat. They said they expect that our product pricing will continue to evolve upwards or downwards depending on a number of different factors. First quarter operating margins are up to 11.4% versus 16% in quarter four and 19.2% in quarter one of last year. Again, putting all these numbers up on screen. Yeah, EPS wasn't beat. EPS was neutral. Again, and again, for a neutral reading on profitability, Tesla's pretty neutral. I mean, it's not a huge parabolic drop. Like, you know, we get sometimes with really bad earnings reports. And so so far it's a pretty neutral release at this point. And again, we will stream the entire earnings call live as it happens. Tesla said, since our Shanghai factory has been successfully running near full capacity for several months, we do not expect meaningful increase of weekly production run rate. So far, so far so good. A pretty neutral reaction here. Nothing crazy. All right, guys, consolidating a little bit. Consolidating here. SPY starting to bounce back up. They said the Cybertruck factory tooling on track. Producing alpha versions. Model Y was best-selling vehicle in Europe in the first quarter. Model Y was the best-selling vehicle in the US in the first quarter, excluding pickups. So that's some pretty optimistic numbers here. Again, putting these numbers up on screen. Starting to dip down on the SPY here, but Tesla consolidating in a neutral range. All right, so just a recap here, guys. Just a recap here. Tesla reported inline EPS of 85 cents versus 85 cents estimate, so neutral EPS. Revenue was up 4.57 billion for the same period last year. Last quarter, the company beat on EPS by 6 cents, which was followed by a 10.97 increase in percentage increase in the share price the next day. So yeah, so far neutral response on EPS, or neutral reading on EPS, better than expected sales and revenue. IBM reporting as well here. We'll cover that too. IBM posted, we'll put those numbers in chat as well. IBM beat on EPS, on profitability, missed on sales. That number's on screen as the numbers on screen as well. All right, guys. All right, guys. So we still got a couple minutes. Tesla testing the lows of the day. We do have earnings call. Again, we do have the earnings call scheduled here. Still got some time. Starting to dip down here. Tesla just broke lows under 177 and after hours here down to 175s now. Testing the 175 level. We'll see if we actually hold here. Hey, what's up, DK? All good. No worries. Time is at 5:30 Eastern Standard Time. So about an hour. And again, we're going to stream the whole thing live, so be ready. Starting to really break down here at 174s right now, 174s. Big breakdown down to 173s here. Let's see if there's any new reporting numbers here. So yeah, it looks like Tesla here. They said revenue was impacted by reduced ASP year over year, excluding FX, negative FX impact of 0.8 billion, 800 million. Revenue was impacted by growth in vehicle deliveries, growth in other parts of the business, and that's what's ultimately causing this drop here. If you look at this, we'll put these numbers up on screen and put this up as well here. But look at the dip here from this report. Again, impacted by growth in vehicle deliveries and growth in other parts of the business. Revenue was impacted by that growth. 11.4% operating margin in quarter one. Again, first quarter operating margin was 11.4%. 11.4%. Operating cash flow of 2.5 billion. Free cash flow was about 400 million. You buy the dip. I might buy a little bit here. All right, we're in 25 shares. I don't mind letting it work too. I can hold it for a couple days if I need to. If it starts to break down under like 170, that's when we'll start to, cut it if we need to. There we go. Not a bad little pop. I'm going to go ahead and lock in some profit there just to lock it in so I don't have to worry about it as much. And so we bought the dip here. I'll lock in a little bit more here. Let the rest ride. See what the earnings call brings us. Yeah, I don't think there's really any Tesla competition. I think you could argue that it's overpriced, but I don't think there's any real competition to Tesla right now. Cash equivalents, and investments increased sequentially by 217 million to 22.4 billion in the first quarter, driven mainly by free cash flow of 441 million, partially offset by other financing activities, including debt repayment. So. Dynamic duo. Let me see what else we got. Wall Street unsure about earnings as S&P Dow. IBM missed on, I think, one of the metrics, right? All right, so Ty, let me get this straight, man. Let me get this straight, Ty. You're coming to a stock market channel that covers all the major earnings, and you're mad that I didn't short Tesla because a random person in my chat told me to. All right, just want to try to make sure we get this straight here. And then you're making fun of me for scalping a little $20 day trade. I mean, listen, bro, let it out, man. It's okay, dude. Whatever makes you feel better about your life, brother. Let it out. It's all right. IBM up to 129, guys. 129. Oh, now you're just joking. Okay. Hey, no worries. Hello, I'm Dank. I appreciate the support, brother. Thank you, man. Uh, Tesla at 174. SPY at 413.75. Hey, my guy, thank you, man. Let it out, bro. IBM up to 129.20s here. John, why are you so sexy? Listen, I mean, I'm just born this way, bro. Like, listen, I just, humility flows through me like water, dude. You guys know. I cut my IBM calls at the open. Oh, you're mad right now, then, dude. Honestly, IBM, I don't even know what IBM does anymore. I know they were like a powerhouse in the 90s, but like, what does IBM really do at this point in time? Bro is so patient. Must be a great dad. Hey, my guy, Kenny. I try over here, That's my line now. Yeah. John therapy over here, I need to go get my coffee, bro. My mistake here is that I drank coffee too early or too late in the day. I had a meeting for real estate, and so I went to drink coffee at like 1, and it was way too late for me to drink coffee, man. Don't you dare talk about IBM's logo, brother. Don't you dare talk about that. IBM is a beautiful logo, man. I actually like IBM's logo. Never too late. Honestly, dude, I'll drink a tea in the afternoon, but not coffee, man. Whatever this coffee was, it was strong, too. Tesla movement, yeah, but when I say Tesla doesn't have any competition, I'm mostly talking about in the EV space. Like, you're always going to have the big boys, and I guess in that argument, they are the biggest competition to Tesla because it's certainly none of the other dedicated EV companies like Polestar or Lucid or Rivian or Mullen. None of those hold a candle to anything Tesla's doing, regardless of how you feel about Elon Musk. In terms of just general production, none of those are about to compete with Tesla. Let's just be honest here. None of those are really going to compete. Even NIO, that's got the local market overseas locked, still not going to compete with Tesla in that regard in terms of sales right now. Maybe distant future, potentially, but not right now. And I think everybody kind of understands that, like, nobody's really competing with Tesla right now. Yeah, Elon's almost certainly going to talk during the call. Porsches are too small, man. I love Porsches, but like, they're too small. I don't know if you've ever ridden in one. They're pretty small, man. Ben's still selling 2 million. I don't think it's a demand issue. Yeah, we have one. I'm not going to say what kind or anything, but we have one. It's really nice. The new ones, they have automatic driving features. So, like, they stop. My wife loves it because, like, you can basically drive autonomously. If that doesn't contradict itself, you can basically have it drive itself for you. And so it'll slow down if somebody's in front of you. You can basically do driving assist and it'll completely stop if somebody's in front of you. I know most of the modern cars do that, but it was honestly really cool. Taking it on road trips is really fun because it's easy. Pepsi or Coke, guys. IBM still ripping up, and again, we saw the earnings for IBM. We did see the numbers for IBM earnings. Honestly, again, I don't really know what IBM does. People could say software. I really have no idea what they do. They're obviously still somewhat big. Somebody tried to use them as a argument for why you shouldn't hold blue chips the other day. But what I told him was this, which is that if IBM is the only example you can give me about why you shouldn't hold blue chips long term, I mean, this thing is still up from, in 1993, IBM was at $12, $13 a share. It is now $130 a share. And so if 100x, or I'm sorry, if 10x in 20 or 30 years is an example of why you shouldn't hold blue chips, I mean, that proves my point as it is, which is that blue chips, regardless of what it is, are generally gonna. It's still relatively safe holding them. Again, biggest edge you'll ever get in the market is buying up blue chips and sitting on them long term. IBM obviously has lost some, uh, space. Most of it's space to Microsoft and Google and Apple and all that stuff, but they're still doing pretty well. Again, I have no idea what they're doing. They did do well with regards to earnings, though. They came in at 126 or 136 EPS, beat the 126 estimate. Sales of 14.25 billion, beat the 14 point or missed the 14.35 billion. So mixed results even still, but Tesla's just consolidating right now. And again, we mostly scaled out of it. We caught a little dip by bounce, and now we're kind of sitting on the rest. And I don't know what to do with the rest, but I guess I'll sit and let it work a little bit. I think we're already a little bit extended on the downside prior to the highs that we put in lately. Over the last couple weeks, and so I don't mind buying the dip, and if it breaks lows or if we get break even on it, I'll just cut it because now we're in a really favorable position where we know we're at least going to break even or get somewhere close to that if it starts to get there, but we should make money, and so we're in the ideal position where we've already taken some profit. And if it goes against us, we'll cut it break even. But if it goes in our favor, we'll let it work a little bit. And that's a really ideal trading position. I'll see if we can hold that position now. And again, Tesla earnings come out. The actual earnings call doesn't go live for another hour or so. And so stick around. We can hang out. IBM ramping up, though. SPY up to 414s here. So SPY, let's see what the Q is doing. Q's a little bit more tech heavy. I need to go get the coffee, man. Honestly, I shouldn't be drinking coffee this late, but like, kind of need it now at this point. I've already started. Porsche is superior in many other ways. Maybe. All I care about is Tesla's faster. IBM paying $1.60 divvy right now too. Really? I mean, I can't imagine I'm investing in IBM though. No offense to IBM, but they're IBM. I don't even know what they do. If I don't know what they do, I'm not buying it. I only buy up long-term companies that I know what they do, and I don't know what IBM does. Again, I know they competed with Microsoft in the past as one of the first computer companies. I understand that, but again, I don't know what they do anymore. $164 next support. Yeah, maybe. I think you're swimming. I can't see how IBM is doing after hours. Yeah, I have no idea, man. Thanks for your report. I'm in Tesla since 16. Elon had a huge impact in buying my house near Berlin. Congrats, Jefferson. That's great, man. Tesla net income and earnings dropped by 20%. Yeah, but that's what they were expecting. We already knew that, Total GAAP, which is generally accepting accounting principles. If you don't know, when you hear GAAP, if you don't know what it means generally accepted accounting principles. At 19.3% for the first quarter for gross margin. Europe and Berlin Brandenburg Model Y production line in Germany produced over 5,000 vehicles in a week towards the end of the first quarter. And the first quarter Model Y became the best-selling vehicle in Europe, which is the EU plus EFTA plus UK. The Model Y was the best-selling non-pickup vehicle in the U.S. in the first quarter. So they were basically the best-selling non-pickup vehicle in the first quarter in the entire United States. They showcased 4,680 cell production at March Investor Day. And production rate continued to improve sequentially. Equipment installation for the Cybertruck production at Gigafactory Texas continued and remains on track. I wonder if they're going to talk about when the Cybertruck is going to come out during their actual call here. And the call is supposed to be in about an hour, but we'll see. Yeah, I mean, it was mixed report, though, Prince. And so Says that automotive feature works within the city. I'm considering one for my wife. You're talking about me with the bins. Um, I mean, it works, but it's mostly meant for highway. I don't know if it works in the city, but it'd probably be. I mean, it'll start and stop for you and accelerate and decelerate for you. But in terms of like maneuvering around the city, I don't think so. What the car will do is, like, the other day I was driving in the car and my son was yelling something, and I had to kind of look back at him for a second and tell him to stop. And when I look forward, and then Tesla gave me a beep alert, or not Tesla, the car gave me an alert, and this is a Mercedes, uh, essentially telling me that if I didn't slow down, I was going to hit the car in front of me, and it'll also stop for me. So it's like it'll stop for me. So there's a lot of safety features in the new Mercedes that are really nice. They're super helpful. And again, we've had ours for like a year now, but it's really nice. Vin Diesel should go to jail. Why? You don't like Vin Diesel? You don't like the Fast and the Furious, bro? Porsche versus Tesla. Love Porsche. I've had about 8 of them and had 3 Teslas. Still have 2 in my experience. Porsche is better quality, more refined. Yeah, I've heard Tesla quality was not super great, but I think they've gotten better at it, right? Tesla just a better experience. The big thing about Teslas is that they're just fast, man. Those things are ridiculously fast, bro. Much faster than like normal cars. People underestimate how fast a 9-second flat quarter-mile stock car is. 9 seconds flat quarter mile is obscenely fast. It's just ridiculously quick, man. And so, yeah, that's fast, bro. Having a 9-second flat quarter mile stock is very quick. Never been in that one, Z. Yeah, I mean, that's definitely a big sell. Godfather of Smokies. Energy deployment up 360%. Again, kind of consolidation right now. Someone criticized John's trading again so he can get some laughs. Honestly, like, I don't understand why. Okay, it's like he was obviously trying to poke fun at me, right? So then when I poke fun at him, he's like, oh, John can't take a joke. Oh, man. And it's just kind of like, dude, I'm doing exactly what you did to be back, man. Now you're upset? What? Like, come on now. I don't understand. Look, if you troll, I troll. If you can't take me trolling you back, bro, you better not troll me. Anyways, I'm gonna go grab my coffee here. Q is basically sideways. SPY is pretty sideways too. Tesla actually did not have a huge release here. I mean, this was not like a crazy big release. Again, the earnings call starts pretty soon, in about an hour. We will stream it live fully right here. You do have more patience than other streamers. I mean, sometimes. Never try to pass cut off Teslas because of their instant acceleration. Yeah, honestly, a 9-second flat quarter mile is obscenely fast. It's just so crazy fast, man, that it's almost too fast. Like, I would never buy my daughter a Tesla for her first vehicle, because to be honest, I'm kind of scared to drive a Tesla if a Tesla Plaid Model S. That thing is so fast. I'm scared to hit the gas on that thing. Oh yeah, for sure. We try to give people a chance. Sometimes, I mean, I'm not saying we don't. I'm not saying we do either. Or I'm not saying we do. I'm not saying we don't either. Sometimes my mods might bet with me about how long specific toxic people last in the channel. And so, yeah, I'm not saying us mods make bets regarding the longevity of certain trolls in the stream, but hey, it could happen. It might happen. Tesla started to dip out down under 173.70s. Put it in chill mode and it accelerates like a Prius. Really? rumors that Tesla's going to announce during the earnings call that they acquired more Bitcoin in January at 20K. If they did, they're sitting pretty nice in that thing right now. You can limit the speed. Yeah, but I don't trust my kid to not go crazy fast. But that's really cool, honestly. All right, so Tesla revenue 23.3 billion, up 24% year over year, came in ahead of the estimates of 23.29 billion. Automotive revenue was at 19.96 billion in the first quarter, up 18% year over year. Reported earnings per share of 85 cents, in line with the street estimate. Operating margin was 11.4% for Tesla, 11.4%. Energy storage was 3.9 gigawatts per hour in the first quarter, up 360% year over year. And solar deployed was 67 MW, up 40% year over year, but down from the last quarter. First quarter production, vehicle production that is up 440,801 vehicles, up 44% year over year. First quarter deliveries totaled about 442,875, which is up 36% year over year. They reported the Tesla Model Y was the best-selling vehicle in Europe in the first quarter. In the U.S., the Model Y was the best-selling vehicle as well, excluding pickups in the U.S. And the company ended the quarter with cash of about $22.4 billion, which it said provides, quote, sufficient liquidity to fund our project roadmap and expansion plans. Digital assets totaled about 184 million on the balance sheet, suggesting the same holdings of Bitcoin. So to put it into perspective for those that said they could be holding more Bitcoin now, their digital assets still totaled about 184 billion or 184 million. So nothing, there's not a huge increase there, which suggests they have the same in terms of Bitcoin holdings, crypto holdings, that is. They ended the quarter with about 5,000 supercharger locations, coming in at 4,947 and 45,169 connectors. Yeah, so I mean that's kind of what's going on. Z is that, like, the problem is that people expect them to beat on everything for earnings. So they expect them to do better than expected on everything for earnings. And so when they don't, and they have an earnings report like today, which was neutral for EPS, so profitability was neutral, it was as expected. It was on par with expectations, is what they call it. And sales revenue beat expectations. They still drop. Even though there was not a negative report, they didn't miss on basically anything here. The company still reacted negatively with regards to their stock movement because of people having such high expectations for Tesla. That's essentially what went down here, is that people just expect a lot from them. And so in that regard, this is kind of what we get, which is that drops. Now, it doesn't mean anything. We still got to wait for the actual earnings report to come out. So consolidating around 172, around 172. So Microsoft dropping Twitter from its advertising platform as they refuse to pay for Twitter's API fees. Starting on April 25th, smart campaigns with multi-platform will no longer support Twitter. You'll be unable to access Twitter account through social management, create and manage drafts of tweets, view past tweets and engagement, and schedule tweets. Other channels, Facebook, Insta, LinkedIn, will continue to be available. Elon is stating that this is related to illegally using Twitter data. All right, guys, Tesla still at 173. Again, we're going to put a timer up here for the actual earnings call. We got about 50 minutes or so, 50 minutes. Until Tesla earnings call starts. Here, let me write this. Yeah, that's a rough looking Tesla. Here, let me try to draw this again. Definitely top 3 drawers in the world right now. Man, look at that beautiful art right there. Wow. Majestic. Hey, what's up, Edward? John, what's the plan on Tesla, bro? Any plays? I mean, what do you mean? Do we expect that Tesla could bottom even further upon the conference? Well, it depends on what they say. We don't really know. It's possible. It's possible we bounce some from the conference as well. So yeah, you know, TJ. Top 2.5 since last time. Definitely top 2.5. Hey, thank you, Russ. Hey, thank you, Rocket. I appreciate it, man. Thank you. You can subscribe, guys. We're going to cover the 4 earnings call. You'll be able to watch all of it right here. Still got some time before the numbers. We're in a little bit of Tesla here waiting. All right, so consolidating here. All right, so dipping down a little bit at 173. We hold again. We're mostly consolidating here. Again, they came in line with EPS, so EPS was as expected at about 85 cents. All right, so 174s right now, or 173s. SPY, let's look at the Q. I think the Q is a little bit more relevant to the market here in terms of Tesla. More tech-based.
fair price for Tesla is about $43 to $60. I mean, I don't know. $40 to $60 seems a little under value. No, I mean, I don't know, guys, but y'all let me know what y'all think. $30, $40. I mean, I don't know. Again, we can look at their EPS graph. Let's take a look. Let's calculate their PE ratio and see if you're right. All right. Easiest way to argue this is just look at the PE ratio in terms of like what's going on. All right. So Tesla today, guys, Tesla today obviously dropped their numbers here. And Tesla came in today at 85-cent EPS. So 85. Let's look at their trailing 12-month EPS. 85 plus 119 plus 105 plus 76. All right, so their yearly trailing PE ratio, or EPS ratio, I mean, is 385. Right, so Tesla currently 173, 385. So 173.30s, 173.49 divided by 385. Right, gives them a PE ratio right now of about $45, which is not like super high. It's not like terrible. But the higher is worse, the lower is better, right? 30 or below is generally what's considered like a fair PE ratio, especially right now in inflationary times. So what this means is that it's about a third too high. It's about 30% too high, right? So I think in that terms of arguments, you could take 173 and multiply it up. You can take 173 and do 2/3 of that. So do it times 0.666. So that would mean, like, if you're arguing it in terms of PE ratio, I mean, what would be considered a good PE ratio for Tesla is about 115 if it had the same EPS numbers. Now, again, inflation is high, and EPS is not a perfect gauge. You know, Tesla could start producing more and do better, but you know, $40 is kind of out there in terms of like pricing. I don't think we'll ever see $40 again for Tesla, of course, and I think, you know, I just don't think that's very reasonable. But again, it's all good, man. Whatever you think is good. Consolidation is mostly what we're getting on Tesla. I guess a lot of people are actually waiting for the full earnings call to start. And again, we got some time, but all right, guys. So again, Tesla at 41.48 right now, 41.48 or 41 minutes or so, 41 or 42 minutes until Tesla actually comes out. We're at right around 173.40. Been at this level for a while now. Could you please do that calculation for Apple too? I'm going to preface this with, like, I don't know what is like a reasonable price for anything. Okay, Apple, you could probably just look up their PE ratio on a website. Let me look at what it is. All right, so Apple here, we can look at their data. See, Apple's trailing PE ratio is about 28. So it's within a reasonable range of value in terms of price over earnings for Apple. So 28 is where it's at, which, you know, it depends on what you do. Look at conventionally, people wanted 15, but I don't know if 15 is necessarily reasonable anymore with all the inflation going on, you know. So I think it depends on what, you know, where you're looking. Here, I'm hungry. Let me see if Carol will bring me something to eat. All right, guys. So we got some time before earnings. And again, let me know if you guys think the market will go up or down from the earnings call. That is, let me know if you think it'll go up and down from the earnings call. I don't know. Hey, thank you, Kay, for the donation, brother. Thank you so much, man. I appreciate the dollar donation. Thank you so much, dude. All right, guys. So yeah, we still got a little bit of time here. Maybe you're a robot. Maybe not. I don't think a robot would know he's a robot unless it was ChatGPT. Then it definitely knows it's a robot. Earnings aren't super scary. I mean, holding through earnings might be. Tesla's starting to bounce back up to maybe 174s. Apple is growing slower than Tesla, so future increase a bit priced in. So I think Tesla should trade a bit higher PE than Apple, but not sure how much. Yeah, I mean, for sure. It's all subjective, and depends on how you look at it. Elon's not the richest man on the planet, I don't think, anymore. Finch. I think the owner of Louis Vuitton is like Bernard Arnault, I believe is how you pronounce it. I don't think it's Elon. No, this is saying. Yeah, I think Bernard Arnault and family. So yeah, Forbes has it as Bernard Arnault, who owns a lot of the big brands that you know. LVMH Empire, 75 fashion and cosmetic brands, Louis Vuitton, Sephora. All right, guys. Tesla at 173.70s, 173.70s. Q at 318.30s. Q at 318.30s. Yeah, I understand Detra. That's one of the biggest strategies I have. Like generally, my best performing strategy is waiting for stocks to pull back big. Generally it happens like honestly, it's really like clockwork. The same thing happens every time, guys. Like I don't know if you guys have noticed a trend in the streams here, but the same thing happens every time. Okay, you want me to explain what happens? This happens every freaking time. All right, every time. Every time we get a blue chip company that drops big percentages when the numbers weren't really that bad. Like Tesla numbers, not terrible. On par with expectations, EPS, better than expected sales, right? But you get big emotional dips from it. I'm there to buy up those dips, right? Every single time I do this, I did it with Snapchat, I did it with Microsoft, I did it with Google, I did it with Amazon, I did it with a bunch of different stocks. Disney. Every time I'm sitting there, I'm like buying this dip. Every single time I do it, people make fun of me. People criticize me and say, "Oh, you don't know what you want to sell. You want to short this thing." It's like, guys, maybe y'all are right, but in terms of just probabilities, when a stock drops heavy percentages, regardless of why, generally it's going to bounce back some. Not always, of course. I mean, Tesla could keep dumping down. This might be an outlier in that regard. But in terms of probabilities, the probabilities are certainly not in terms of shorting stocks that are down 10% in pre-market or in after hours or whatever you would choose to do it. Again, I do this very often. Like this is one of my favorite trading strategies. I'm green on the year doing it in Thinkorswim. So it's something that I do every time. But again, like clockwork, people criticize. People are biased is the easiest way to put it. Like people are just biased against certain stocks. But again, what I've noticed is that most of the time people are wrong. The people who are pushing for huge catastrophic drops in stocks are generally not accurate. Most of the time, the stock actually bounces back a little bit after very large percentage drops. And again, you could look at the receipts of the stream. I take these trades all the time. Works very often. Not always. Nothing's 100% in trading. But generally, I can wait for a very large pullback. I did it in Morgan Stanley this morning. And most of the time, they're going to bounce back. And so I think a lot of traders need to get it out of their head. Like, you're just going to, like, you're watching The Big Short and just, thinking you're Michael Burry. And just understand, I've been the one sitting here telling everybody the market's probably not going to crash short term. And everybody's called me dumb. They told me I don't know what I was talking about and all this stuff. And the market has kind of consistently gone like this since I started telling people that. So, I mean, don't be dumb. Yeah, most stocks aren't just going to do catastrophic crashes short term from mixed earnings reports. You know what I mean? But for whatever reason, man, again, people just get really emotional about specific stocks. Like, you got some people that love stocks, like they're fanboys of specific stocks, and then you got some people that just freaking hate certain stocks. Like, you thought these stocks stole their wife. They just absolutely hate it. Speaking of wives, thank you, baby. Love you. Thank you. Carol made me waffles. What kind of waffles? Blueberry. I don't know, regular. Okay.
They're just regular, but they're like the protein waffles.
Okay.
They're like the Vans protein waffles.
Okay. Thank you, baby.
Love you.
Love you. All right. Tesla bouncing back. Well, as I say that, Tesla bouncing back a little bit. Show you Carol. There's Carol right there. With that said, Tesla bouncing back, guys. I mean, I'm not going to say I told you, but hey, I might have. Yeah, if it's a horrible stock, don't look at it. Like, just don't buy it. Like, I'm not shorting blue chips ever. I don't care how convinced I am that the company's terrible. Like, even the Hindenburg short report. Like I said, SQ, prime example. SQ dropped what, 30% from that Hindenburg report. And again, I bought the dip at like 55 or wherever I bought it. And again, as I bought it, people are sitting there saying, oh, dude, this dude doesn't have a trading plan. He's just buying dips. What is he talking about? SQ's a terrible company. And I told him, I said, I don't care if SQ is terrible or not. Like, it's down 30% in 10 minutes. Again, generally, it's going to bounce back. Again, I'm looking at probabilities here. It might do anything short term. And of course, if you look at SQ, I bought it in the 50s, sold it in the 60s. Still at 63. And now, as I said this, Tesla bouncing back. What do you know? Cut a little bit more off just to lock in some. There we go. Now I can just be really patient on the rest and let it work. Doesn't seem like it's catching a falling knife with blue chips, because blue chips are going to go up long term generally. Not always. You're always going to be able to identify and isolate outliers in that situation, but a lot of people don't understand the stock market. They really don't. Like, listen, S&P 500 over years and years and years and decades of data. S&P 500 gives you 6 to 12% a year on average, right? And so one of the most consistent things about the market, despite crashes in between them, despite certain stocks that, lag the market or lag behind the market, I should say, blue chips are generally going to go up long term. So again, everybody wants to be the Michael Burry, but Michael Burry's most of the time wrong too. He might have been right about 08, but he's been wrong about everything since then. So you want to look at what they're going to talk about during the actual earnings call here, guys. You can see this full list here. And so we'll see. Should be an interesting earnings call. And call starts in about 25 minutes. Yeah, for sure, Kale. Is that a blank pattern in the 2-minute chart? No, it's a Teenage Mutant Ninja Turtle breakout pattern. All right, guys. Again, 25 minutes or so. All right, let's watch 174 to see if it actually holds. All right, guys, about 25 minutes. based on needs, not wants. Yeah, but I mean, that's such a subjective thing. You could need an automobile, but that's a pretty broad, list of buys there, just in general automobiles. So I mean, it depends, of course. Are you podcasting all day? I mean, this isn't a podcast, this is a live stream, but we're mostly covering economic data. We're not, I mean, we kind of hang out and talk, but we're mostly covering economic data. Right now, we're covering Tesla earnings. The actual earnings call is released in about 20 minutes, and we will live stream that entire thing. Yeah, SpaceX is supposed to have, but we live stream every weekday morning. All right, guys. So Tesla's still consolidating, not really doing that much. We're done eating our waffles now. They were protein waffles, if it makes you feel better about me eating waffles. All right, guys. So again, Tesla consolidating sideways. Apple is not really moving. Apple's not one of those stocks that's reacting a ton to this. We could look at like Microsoft here. You see the correlation there. Microsoft and Tesla are kind of like enemies right now, arch nemesis, if you will. And so Microsoft basically stopped allowing people to use Twitter on some of their software. So that's an interesting dynamic to watch right now as well. Microsoft's currently at 288. Microsoft's with the Chat GPT, and I get it. Elon has been kind of going kind of hard into Microsoft's decision to monetize Chat GPT. So it's a really interesting dynamic there. And again, we'll see what happens, but yeah, they were gluten free. Yeah, Elon said he's going to sue him. I don't know if that's going to turn out well, but he could try, All right, guys. So right around 174s. Is this live? Yes, it is, Adventure Kids. No, it's not actually. We are just, we're AI software predicting what you're asking us and then responding algorithmically, SpaceX. So did they push it back another day? Do you do daily live streams? Yes, we do, Sai. We stream every weekday morning. We start pretty early at like 6 o'clock market time. We stream until about 10 o'clock, 10:15, 10:30 market time usually. But yeah, we do stream. Again, hit that subscribe button. Help me break 105 subs. 105,000 subscribers, that is. If you haven't already. Again, we cover all the big major economic data. We don't charge for any of our content. We don't sell any of our content. We don't have any paywalls behind any of our content. We put everything out there for free. We cover all the big economic data like CPI, jobless claims, retail sales, Jerome Powell press conferences, and rate hike decisions. Earnings, obviously, with Tesla's today, but over the next couple weeks, we've got like Amazon, Apple, Google, Snapchat, Microsoft. Big earnings are coming out over the next couple weeks. We are in the heat of earnings season. If you don't know what earnings season is, every quarter, we generally have a 3 to 4 week period of time where big earnings come out. So where stocks drop earnings. These are usually heavily influenced. These are usually pretty big influences over market activity because, again, these are the largest companies in the world reporting earnings, with Tesla today. And so in that regard, we do have a lot of big earnings reports coming up that we will be live streaming fully so you can understand it, breaking down what they showed, what happens, all that good stuff here. And so again, subscribe if you haven't yet, hit the notification bell. We appreciate it. And yeah, I'm starving right now, Dan, to be honest. I hit sub twice. Now I'm unsubscribed. No, you're not, because if you did, you wouldn't be able to comment right now, sir. We are in sub only mode. Tanking? Well, Tesla's moving up a little bit now. Hey, thank you, Jen. I appreciate it. Thank you. I really appreciate it. Thank you so much. Yeah, I'm definitely hungry. But it's all good. Listen, we'll wait. Show must go on. Tesla consolidating right now. We've already taken profit on it, but we're sitting in it now. Do you take out your trash once a week? Yes. Five Teslas. What do you need 5 Teslas for, though? I mean, that just sounds like a way to build up debt, Now, unless you got some type of business use for that, where you can just write off, $300,000-$400,000 in business expenses by doing that. I mean, that's the only justifiable reason to own 5 Teslas, unless you're just rich. If you're rich, and you kind of got FU money, it doesn't matter. Thousands of channels on YouTube, and you are a favorite. Hey, thank you, Tahir. I appreciate it, man. Papa John's. Hey. Donald Dapper John. Hey, what's up, Guts? Yeah, that's very nice, Jen. Thank you. I appreciate the $10 donation. I joined late, and after losing 2K in Tesla, I was bullish. Sorry to hear that, sigh. I guess one of the big lessons I try to tell people here is that, like, look, you can try to predict what's going to happen with regards to earnings, but in poker, there's a term called plus EV. It stands for plus expected value. Buying up positions short term ahead of earnings reports is not a plus EV play. Like, you're not going to make money long term if you do that every time. Like, there's just not really any significant edge, because regardless of what the numbers show up to be, even if you're right, there's still no guarantee that Tesla is going to go. Say it's a 50-50 chance, right? So say you got a 50-50 chance of being right every time. When you add the fact that you don't know if Tesla is going to respond positively to positive earnings. Sometimes stocks like Tesla today had they had mostly positive results. They had good sales, neutral EPS. They still dropped. And so when you add that factor in there, the edge of predicting earnings reports and gambling big is almost nothing, And so no need to do that. Just wait until after the report, and then maybe you can attack a trade if you want to do it that way. But again, just don't gamble money just because you can. I think that's the point. Is like, that's just gambling, and again, I think a lot of people are justifying their trading when they're just kind of trying to feel the rush of it, which is just gambling. And again, it's not really something that I think is the right move. I think it's just going to hurt people long term if they do that. So just be smart, guys. Predicting earnings is, unless you got insider info, which is not most of us, be smart. What's up, Miller? Do you think they do buybacks? I don't know. I'm assuming they would have announced it already. No, they didn't have mostly positive ER results. I'm looking at the base metrics EM. I'm not going to argue about subjective things like, whatever you want to argue about in terms of some nuanced part of their report. What I'm talking about is just the base metrics. EPS was neutral. Sales were positive. Better than expected, that is. So EPS was as expected, which is neutral. Sales were better than expected. All right, when you look at the base metrics, mostly positive report in terms of numbers. They said some other negative things, of course, but like in terms of the base metrics, the point is there's not really much of an edge predicting it. Basically, Corey. And trust me, I get a really unique perspective in terms of like, I get a lot of people here trying to tell me a lot of different things. They'll say, oh, short this, short that, buy this, buy that. They'll get really pressuring and they'll say, hey, do this now. Guys, do it now. I always tell them, no, I'm not going to do it. I have no idea who you are. I'm not going to copy some random dude in the comment section. And then if they're wrong, you never see them again. But if they're right, you never hear the end of it. You know? And so it's just like, look, there's not really any profound edge in gambling on earnings plays. Wait until the earnings come out, and then you can maybe take a position based off of extension. That's what I like to do, is I just wait for the earnings to drop, wait for big percentage drops on a short-term basis with neutral or slightly good or slightly bad earnings. But I look for extension, and then I buy up that extension, and I'd sell and take profit whenever I can. That, for me, has had a high probability. But again, I can't really guarantee that's going to work for anybody else. Again, not an investment professional here. No idea if that's going to work for anybody. Yep, Tesla numbers are... their earnings call hasn't started yet. The numbers are actually on the screen already. We can put them up if you guys want to see them. So Tesla numbers are right here. They came in line with EPS and better than expected on sales. All right, so Tesla's starting to slowly creep back up again. Been around that 174 to 176 price point for the last 25, 30 minutes or so. We still got 12 minutes before the actual earnings call starts. And again, we are going to stream the full earnings call live right here. So it will be live in about 12 minutes. Yeah, snap pawn. Yeah, what pawn said. Generally, I like looking for healthy blue chip companies that everybody knows and understands, and I like waiting for them to drop 10% plus on a short term basis. And then I like buying up those pullbacks, even though everybody's yelling at me not to, and then riding them back, and watching everybody get kind of quiet afterwards. Again, the only mid cap ever really done that on. There's two of them. I did it with SQ. Again, bought it at the 50s, sold at the 60s, and I did it with Snapchat, which I did it a couple times with Snapchat, where I bought it at originally I bought Snapchat at high 7s and low 8s. Went up to 10 within a couple weeks. Or the last time I bought it, I think it was at 10. I wrote it up to 12 or 11 or something like that, if I remember correctly. I think it's back down to 10 now, but I've been out of it for a while. But yeah, slowly starting to creep back up. We're right around 174.75 right now, right around that previous high. If we can get over this hump right here, maybe we can do something. But we're right around that level now, so. Yeah, I did it with Disney. I've done it with a bunch of them, honestly. Honestly, everybody's probably going to get mad if I give the list of stocks I've done this on. They're going to say I'm bragging too much, or I've said it already, or whatever it is. So I'm just not going to go through the full list of stocks. I said it earlier. But I guess the point is, if you watch the stream, you might understand that I have an edge in doing that with swing trading. Again, so that's kind of why I'm not really critical, but that's kind of why if somebody comes out and they're like, oh, this dude doesn't have a plan, or this dude's just kind of emotionally buying dips, I just kind of have to tell them, hey, look, you really don't know what you're talking about. How do you trade after the bell? My broker shuts down at the end of the day. You just got to put it in EXT mode. So like if I want to trade whatever, I'll put the TIF on Thinkorswim, means extended hours, time in force, extended hours. And then you can use only limit orders. You can't use market orders in after hours. You can only use limit orders. Do you trade other than earnings pullbacks? Yeah, we day trade, swing trade, invest. We trade at the open every day for the most part. So yeah, we trade. Again, though, I don't really claim to be anything. Like, I don't claim to be a good trader. It's not just scalping, though. Hello. It's most of the time, it's not scalping, actually. Like, I'll day trade scalp trades. But most of the time, like, my highest edge strategy is waiting for blue chips to dip. Not necessarily only on earnings, but a lot of time that happens on earnings. But it'll also be like, again, SQ had the Hindenburg short report, dropped 30% in like 10 or 15 minutes. Everybody else was telling everybody that it was just going to crash, and then it ended up bouncing back pretty big percentages. And again, we called it as it happened. We told people we thought it would bounce back too, and it did. But you know, Amazon dropped from earnings. Disney just got extended on the downside. So there's a lot of different reasons. It's not only it's not like only earnings plays. We just look for big extension short term. So like big pullback short term, and we'll buy that up. Do me a favor, guys. Hit that like button. Hit that subscribe button as well. Hopefully we can break over. Hopefully we can break over 105,000 subs today. We're pretty close. I mean, we need like 130 subs today, which we might be able to hit if we once everybody comes back for the actual earnings call, which is again in about 8 minutes or so. My friend is an honorable, courteous, and chivalrous guy, but he hates the market. When I asked him why, he said gentlemen prefer bonds. Yeah, I mean, if you guys don't know what bonds are, I like bonds. I mean, bonds can be powerful. It depends on how much money you're working with, though. Bonds are basically contracts with the government where you loan the government money by buying bonds. If it's under a year, it's technically called a bill. If it's between 1 and 10 years, then it's called a note. And if it's over 10 years, then it's called a bond, right? And you're basically loaning the government money with a specific agreed upon maturity date, which is, like I said, 10 years is when they mature or whatever. And so the government basically pays you interest. They have to return the money on the day of maturity, which is maybe 10 years later. If it's a bond, if it's a bill, less than a year. If it's a note, you know, sometime under 10 years. But they'll also pay you interest payments for that, right? So it's basically bonds, bills, notes are all deals with the government, basically loaning the government money. If you've got the money like that, and they have to pay you back, it's basically guaranteed profit with interest is essentially what it is. And then they pay you back the money anyway. So yeah, I mean, you could always trade futures. We're going to have a kind of a video debuting about why new traders might find value in futures today. You can buy a lot of shares of Tesla at $50. when does the conference call start? It might be like right above me in some type of timer format that says Tesla call with an arrow pointing at it and beautiful writing. Could be. SPY right around the volume weighted average price is at 413.50 here. 413.50. So again, we'll see what happens. Yeah, definitely top 3. Why is Tesla down if they beat? Well, they didn't beat fully. They had mixed results. They had neutral EPS and then they beat on sales. But they also said some negative things with regards to like what happened to them, what they're expecting, and stuff like that. So, and I think a lot of Tesla investors just expect them to do better than expected each time. So when they don't do better than expected on everything, you get certain people selling. Okay, here, we're going to put you in timeout, Ice Cube. There's just no reason to say the same thing over and over and over and over and over again in chat, man. So again, we're going to put you in timeout, brother. Hope you understand. We appreciate you here. Just don't spam stuff, man. Well, you seem to be panicking about the stock market. Yeah, I don't know anything about that, UK. Are you being real? Real about what? You talking to me? Oh, wait, you're talking to somebody else. Classy channel. I appreciate the maturity for real. Hey, we try, bro. Definitely top 3 most mature people ever. And yeah, 174 seems to be a support level that wants to hold here. We got 3 minutes before the actual call starts, guys. 3 minutes. Yeah, he's just saying the same thing over and over again. I mean, I'm not trying to kick him out. He can come back. He just can't spam the channel. All right, guys. Hey, we need like 100 and something subs to hit our goal here, guys. You want to hit the subscribe button, guys. Do it now. Again, we cover all the major economic data. You want a one-stop shop for it where we don't sell a course. Hey, thank you, Patricia. I appreciate it. Thank you. My voice is similar to TJ Miller from Deadpool, also from Office Christmas Party. And from I'm kind of I do some software, in programming. So I remember him from Silicon Valley is who I remember TJ Miller from. But hey, thank you so much. I appreciate the donation, Patricia. Thank you. I watch every morning and then drive for a living and listen to your earnings calls. I really appreciate your due diligence and your hard work. Hey, thank you, Ben. I appreciate it, man. You don't do crypto, do you? Yeah, man, we got a crypto show as well. It's beginner trading. It's youtube.com/beginner crypto is our crypto channel. So we have a crypto channel that we do stuff on too. All right, guys. So yeah, the earnings call is about to start. We got like a minute left, maybe like a minute and a half. And I'm going to go ahead and turn the timer off. Get rid of the majestic writing right there. And yeah, also, guys, we get this ready here. So let me make sure we got this live. There we go. All right. So we're going to mute the music. Turn the music off. And then we're going to get ready to play. Oh, man. Elon Musk has got this other music playing. All right, guys. It's about to start. I mean, we got about, 40 seconds or so until it starts. Yeah, I'm not like a super expert at software, Ruben. I mean, I do like React Native, like front end development. So it's not like I'm not building, back end algorithms or anything. But anyways, call's about to start, guys. The final countdown. It's youtube.com/beginner crypto. Here, I'll put the link up if you want to see it. We're gonna do a crypto show tomorrow, I believe. Um, it's youtube.com/beginner crypto. We're doing a crypto show tomorrow. Here's the link right here. All right, so yeah, he's about 30 seconds late so far. We're waiting for it to start. He's got some old Abercrombie and Fitch music playing in the background. You know, and waiting here. Patiently waiting. Um, yeah, I mean, you can stick around here. The show starts pretty soon. I mean, we're gonna cover the earnings call. You'll be able to listen to the entire thing. Right now, I'm just saving you guys from this. Yeah, I'm from Louisiana, Jamie. So like, I'm from about 30 minutes away from where Theo Vaughn is from.
Three Q&A
Sound check.
webcast. My name is Martin Vieca, VP of Investor Relations, and I'm joined today by Elon Musk, Zachary Kirkhorn, and a number of other executives. Our Q1 results were announced at about 3 p.m. Central Time in the update deck we published at the same link as this webcast. During this call, we will discuss our business outlook and make forward-looking statements. These comments are based on our predictions and expectations as of today. Actual events or results could differ materially due to a number of risks and uncertainties, including those mentioned in our most recent filings with the SEC. During the question and answer portion of today's call, please limit yourself to one question and one follow-up. Please use the raise hand button to join the question queue. But before we jump into Q&A, Elon had some opening remarks. Elon?
Thank you, Martin. So just a Q1 recap. Model Y became the best-selling vehicle of any kind in Europe and the best-selling non-pickup vehicle in the United States. And this is in spite of a lot of challenges in production and delivery. So it's a huge credit to the Tesla team for achieving these great results. It is worth pointing out that the current macro environment remains uncertain. I don't think I'm telling anyone anything people don't already know, especially with large purchases such as cars. And while we reduced prices considerably in early Q1, it's worth noting that our operating margin remains among the best in the industry. We've taken a view that pushing for higher volumes and a larger fleet is the right choice here versus a lower volume and higher margin. However, we expect our vehicles over time will be able to generate significant profit through autonomy. So we do believe we're like laying the groundwork here, and then it's better to ship a large number of cars at a lower margin and subsequently harvest that margin in the future as we perfect autonomy. This is an extremely important point. Let's see, regarding the Cybertruck, we continue to build alpha versions of the Cybertruck on our pilot line for testing purposes. It's a great product, and we're completing the installation of the volume production line at Giga Texas, and we're anticipating having a delivery event, a great delivery event, probably in Q3. As with all new products, it'll follow an S curve of, so production starts out slow and then accelerates. So the Cybertruck is no different. So there's a tremendous amount of demand for the product, obviously. It is, in my view, a fantastic product, a Hall of Famer. But as with all new products, it takes time to get the manufacturing line going, and this is really a very radical product. It's not made in the way that other cars are made. So let's see, with regard to Megapack, we're making great progress. Our energy storage deployment reached nearly 4 gigawatt hours in Q1. It's by far the strongest quarter ever. And this growth was achieved thanks to the ongoing ramp at our Megafactory in Lathrop, California. There's still some way to go to reach the full run rate of 40 gigawatt hours per year. And then we additionally announced the start of a new Megafactory in Shanghai. So we were, as we've expected, the stationary storage growth actually will significantly exceed the vehicle growth. Regarding autopilot and full self-driving, we've now crossed over 150 million miles driven by full self-driving beta, and this number is growing exponentially. I mean, this is a data advantage that really no one else has. Those who understand AI will understand the importance of data, of training data, and how fundamental that is to achieving an incredible outcome. So, we're also very focused on improving our neural net training capabilities, as is one of the main limiting factors of achieving full autonomy. So we're continuing to simultaneously make significant purchases of NVIDIA GPUs and also putting a lot of effort into Dojo, which we believe has the potential for an order of magnitude improvement in the cost of training. And Dojo also has the potential to become a sellable service that we would offer to other companies in the same way that Amazon Web Services, offers web services, even though it started out as a bookstore. So I really think that, the Dojo potential is very significant. In conclusion, we're taking a view that we want to keep making and selling as many cars as we can, despite this being an uncertain macro environment. This is a good time to increase our lead further, and we'll continue to invest in growth as fast as possible. Once again, I'd like to give a huge thanks to all Tesla employees worldwide for doing an incredible job again, and super appreciated.
Thank you very much. And Zach has some remarks as well.
Yeah, thanks, Martin. I want to start by congratulating the Tesla team for record vehicle production and deliveries. And I also want to congratulate our energy storage team for record volumes as well. There's 3 main points I want to make. First, automotive gross margin and operating margin reduced sequentially, but as Elon mentioned, these remain at healthy levels. In particular, automotive gross margin was impacted by a few factors since our discussion on the last earnings call, which include additional action taken in the second half of the quarter to improve vehicle pricing, and one-time items, most notably warranty adjustments on older S and X vehicles, as well as increased deferred revenue for certain autopilot features as we transition technologies. Progress on vehicle cost reduction continued in Q1 with meaningful improvements on logistics and the beginnings of some commodity cost reductions starting to be realized. Per unit costs for Austin and Berlin improved as well, driven by record volumes. However, these factories still provide a margin headwind and will likely continue to do so until after we reach and stabilize at our intended volumes. Note that Q1 was our third quarter in our multi-quarter plan to move to a more regionally balanced mix of build and deliveries. As I've mentioned previously, this results in lower deliveries than production within a quarter due to a higher volume of cars in transit at the end of the quarter and has an associated impact on quarter-ending free cash flows. This was particularly prevalent in Q1 for S and X as we began exporting cars for international deliveries. Second, our storage business is starting to take shape, and this is exciting to see after many years of investment and focus. This business is growing as a percentage of the company's revenue and reached its highest level yet in Q1, driven by an increasing rate of deliveries for our Megapack products. We are also making progress on storage profitability, generating our highest gross profit yet in the quarter. Third, I want to reiterate the philosophy by which we are operating the business this year. Our approach is to grow volumes as quickly as possible in both our vehicle and energy businesses. We plan to continue to invest heavily into our future plans, which include the Cybertruck, next generation platform, in-house cell production, energy storage business, and our autonomy and AI-enabled products. And we plan to do this while keeping the business financially healthy and industry-leading. To accomplish this, we need to remain focused on cost efficiency and working capital, and in particular, unwinding the strategic inventory buildup left over from the pandemic. I want to conclude by thanking the Tsla team again, as well as thanking our suppliers and our customers.
Thank you very much. And let's go to investor questions on say.com. The first one is, what is the process to make auto pricing adjustments? What variables do you consider? How frequently do you review pricing?
Do you want to take that, Elon, or do you want me to take it?
My apologies, sorry, I was on mute. Yeah, I think this is not something that we can really talk about. It's just we do our best to evaluate the production output, macroeconomic conditions, and we make a decision. But it's unless there's something you'd like to add, Zach.
No, I think that's right. I mean, as a team, we review where we stand globally on a weekly basis, and certainly can't get into the details of the reasons why certain decisions are made. But it is something that's very actively managed by a subset of the leadership team.
Thank you. The second question is, do you still believe Tesla Energy will be bigger than auto? And when will you provide more formal guidance on Megapack and overall Tesla Energy?
Yeah, I should just clarify, like bigger than auto from the standpoint of like total gigawatt hours deployed. So it's possible automotive revenue may be higher, but gigawatt hours, I think, will be probably higher with stationary storage. If you just look at what's needed to transition the world to a sustainable energy economy, there is more stationary energy storage needed than there is mobile energy storage. So, and we are seeing growth of our stationary storage well in excess of automotive. So that is in line with expectations.
Yeah, and on the guidance part of the question, and maybe Martin, we can combine this with the next question, which is on guidance for margins. Just have a single comment there. I think we will get to the point where we as a company provide guidance on the storage business. I say storage is a combination of both the Megapack business and the Powerwall business. Relative to total revenues of the company, it's still fairly small. And the business has a lot of volatility currently, both in terms of volumes as well as financials, just given the small volumes and kind of diversification of the customer pool there. But as this business grows and smooths out, I don't think we're that far away from it. I think including these volumes on our day 2 production and deliveries release is something that we'll start doing. And then we can talk more formally as a business about our expectations over the coming year. I think it'll be a few more quarters before we get there.
Thank you. The next question, as you said, was already answered. So let's go to the battery question.
Oh, sorry, just one other thing I wanted to mention on margin. While we're not providing specific guidance there, I mean, just to set expectations of where we think this business will go in terms of margins, probably generally in the ballpark of what we've seen historically on the vehicle business. We generally look to mid 20% gross margins for any program that we launch. And so we're not there yet on this business, but that's what we're working towards.
We're hopeful to get there later this year, but that's not a promise. That's an aspiration.
Thank you. The next question is, how well are 4680 cells meeting the expectations described on the battery day? How long will it be until the cells meet those goals? Drew?
Yeah, so on Battery Day, we established a cost down roadmap through 2026 across 5 areas of effort. There was the cell design we discussed, anode and cathode materials, the structural pack concept, and the cell factory itself. And we've been making progress across all these aspects since then. For the cell factory, the Texas 4680 factory, we are partway through building and commissioning and installing and operating. Will be 70% lower capex per gigawatt hour than typical cell factories when fully ramped, in line with what we described on Battery Day. And we're continuing to further pursue densification and investment reduction opportunities in future factory buildouts like in Nevada. On the cell design, we're in production with not only the first generation tablet cell we unveiled on Battery Day, but a second, more manufacturable version in Texas today. On the cathode material side, we have a number of activities underway per the Battery Day roadmap. For lithium, our Corpus Christi lithium refinery breaks ground this May. Our goal is to start commissioning portions of the facility before the end of the year. The refinery uses the sulfate-free spodumene refining process with reduced process costs, no acid or caustic reagents, lower embodied energy, and actually produces a beneficial byproduct that can be repurposed in construction materials. We discussed all of these concepts on Battery Day. Same with cathode precursor. We've successfully demonstrated a lower process cost, zero wastewater precursor process that we described on Battery Day at both lab and pilot scale, and are in the detailed design phase for incorporating this technology into the front end of our Austin cathode facility. On cathode production, we are 50% equipment and 75% utilities installed at our new cathode building in Austin, with our goal to begin dry and wet commissioning this quarter and next quarter, with a target to produce first material before the end of the year. Structural pack, we saw big improvements with pack manufacturing with the 4680 cell and the structural pack concept, 50% lower capex and 66% smaller factory for the same output in gigawatt hours per year. We do believe structural as a concept is a good one. It's simpler. We'll continue to structurally load the cells and use the pack as the floor of the vehicle, while iterating the design to closer to B-level execution of this A-level architecture in future programs. And zooming out for the 4680 team, Q1 was all about cost and quality. We made significant improvements in both areas. In Texas, production increased 50% quarter over quarter. Through yields increased 12%, and Cato peak rate increased by 20%, and through yields improved by 20%. Altogether, the team accomplished a 25% reduction in COGS over the quarter, and we are on track to achieve steady state cost targets over the next 12 months. And going forward for the rest of the year, the priority one is yielding cost for the 4680 program as we steadily ramp production ahead of Cybertruck next year.
Thank you very much. The next question is, what do you anticipate 2023 automotive gross margins ex credits will be at the company's current pricing levels?
Yeah, I can start off on this one. This is a difficult environment to make a projection like this. There's a lot of macro uncertainty. There's also headwinds and tailwinds. And, this is basically a question I think that's asking about our viewpoint on where costs will go. And within costs, there's a set of costs in which we do control, a set of costs in which we're kind of subject to what's going on in the macro world. Within the bucket of things we control, the most of the cost down that we're working on is around ramping our Austin factory, stabilizing that, and then doing the cost optimization work once we get to our intended volumes there. And a part of the cost journey in the Austin factory is, as Drew mentioned, the 4680 cell, which is an input into our Austin COGS. And so, as the 4680 program improves over the course of the year on cost, as Drew mentioned, and then the non-cell portion of the factory improves, we see a pretty good trajectory in the Austin facility. But a similar story exists in the Berlin factory. It does not have 4680 as an input, but for that factory, the journey to complete localization is still ongoing. And so over the course of this year, as volume increases, more localization occurs, we do see a good path to cost reduction in the Berlin factory as well. In existing factories too, we talk about this on every call, so I don't need to rehash it, but the expectation is that every existing factory improves all of their key metrics, and we continue to see the progress there. There's also a handful of other costs in which we have influence, but the philosophy here is that we're aggressively going across every cost bucket that we can. Within the world that we don't control, the two major costs there being logistics, which fortunately is moving in our favor. And I think our supply chain team has done a great job both on logistics optimization and taking advantage of reduced spot rates where they can. So thank you to our supply chain team. And then there's the commodities world, which has been a huge page point in our cost structure over the last, say, 2 years or so. And we're still kind of at the maximum of paying for commodities in our cost structure. It kind of maxed out in the second half of last year. We did start to see in Q1 a little bit of improvement. We think there'll be a little bit more improvement in Q2. But
lithium has dropped a lot. It's worth mentioning
Yeah.
that the price of lithium has dropped significantly.
Yeah, and that's the piece that we expect to see more impact from in Q2. And generally, as a company, we do expect commodity prices to come down and have a more meaningful impact in the second half of the year.
Yeah.
So, this is our approach. How that nets out, I mean, just a lot of risk, and we'll have to see how the year progresses.
Thank you. The next question is, how has global order intake tracked since the most recent round of price cuts?
I think the overall thing we can say is that orders are in excess of production.
Thank you. And maybe the last question from investors. Can you give updated specs and pricing for Cybertruck and any new features that will make it to production?
Well, I think we'll save that for the Cybertruck handover, which will hopefully be around the end of Q3 this year. And one thing I am confident of saying is that it's an incredible product. It's a Hall of Famer, I think. And a product like this only comes along once in a long while. So people will not be disappointed at all. It's amazing.
Great. Thank you very much. And let's go to analyst questions. We'll start with Alex Potter from Piper Sandler. Alex, go ahead and unmute.
Can you hear me?
Yep.
Yes.
Okay, perfect. So first question was on Lathrop. Obviously, it's great to see the growth there. Just wondering when you think that facility might be closer to full utilization. Are you just sort of deliberately working your way up the S curve there? Demand obviously isn't the limitation. So what are the steps, I guess, to unlocking full utilization there?
Sure. There are some classic, factory ramp aspects of what's going on in Lathrop. We actually had 2 phases of the CapEx there. We phased some of the general assembly parts of the facility. But in addition, we also have ramps with our suppliers that we are following. So both on the cell side and on the power electronics side. And we will see that unlock in the latter half of this year with both those inputs. So the overall facility was phased with the second phase of CapEx coming online towards the end of this year.
Okay, great. And then I guess my second question is on your ability to serve other markets out of Shanghai. Obviously, the facility in Berlin should be opening up your ability to, I guess, allocate more vehicles to Southeast Asia, Australia, other areas. I'm just wondering what other regions you think you're maybe not yet serving effectively. What are your timelines for addressing some of those gaps in your regional exposure? Thanks.
Yeah, that's a good question because there are still many parts of the world that we do not yet serve with respect to vehicles, especially. So we do expect to open up new markets around the world. And while those markets are not necessarily individually gigantic, they do add up to, if you add up a whole bunch of markets, they do collectively sum up to something significant. So it's high time that Tesla offered its cars to the rest of the world, and that is something that we intend to do.
Okay. Thank you very much. Let's go to the next analyst, George from Canaccord. Go ahead and unmute.
Hi, thanks for taking my question. I was wondering first if you could discuss your FSD take rates and whether you've seen any significant positive or negative change there. And also, given that you've reduced the prices for your vehicles, do you think you need to do that for FSD as well? Thanks.
Well, I'll decline to answer the details on the FSD take rate, but it's a tricky pricing question because the value of a car that is autonomous is enormous. So in a way, the price right now is an option value on on an autonomous vehicle, and that value is that will ultimately be very significant. And it's really yeah. I mean, for those that are using the FSD beta, I think you can see the improvements are really quite dramatic. There'll be a little bit of 2 steps forward, 1 step back between releases, and for those trying the beta. But the trend is very clearly towards full self-driving, towards full autonomy, and I hesitate to say this, but I think we'll do it this year. So that's what it looks like. Yeah.
Thank you. Maybe on the dramatic change we've seen in EV-related commodity prices, do you think that's a reflection of any recent overcapacity in mining and refining, or is that sort of a coincident indicator on global EV demand? And how do you expect those prices to kind of track over the next several quarters? Thank you.
Man, I wish I had a crystal ball to answer your question. I don't know if we can provide a question that would that would have any value really. I think we're in uncertain times, and if somebody's got a crystal ball they can lend me, I'd really like to borrow it. But these are uncertain times. My guess is it's economic stormy weather for about a year or so, and then if we'll call it roughly 12 months, and then this is just my guess. It's just pure speculation. Stormy weather for about 12 months, and then provided there are no major geopolitical wild cards that show up, things start getting sunny around spring next year.
The only thing I would say on the EV materials markets, they're not all super liquid, and some of them, for example, less than single-digit percentage of the market is actually traded on the spot market. So, and not only are they not super liquid, there's not storage isn't particularly facile for all of the materials. So small mismatches in supply and demand drive large price swings, not really real price swings, but just temporarily large price swings. So it's hard to read into those price swings. I don't know, Karn, if you want to add anything.
Well, but this is Karn, by the way. We are seeing, as Elon mentioned, quite a bit of softening in the lithium carbonate market. This was, 6 months ago, we were trading at $85,000 a ton, and today's spot price is about 26. So there's been a dramatic decrease in that. Of course, we were able to take advantage of low lithium pricing earlier on with fixed price contracts, and we find that this is going to be another opportune moment to basically extend that into the later half of the decade. But we at the quantities we're procuring, we're not as impacted by the spot market because we have those contracts in place, and we're just going to be going and doing more of that. The other thing that's happening is because of the price spike, a lot of the companies that are in this business are becoming more ambitious about finding more upstream resources and exploring locations in Africa as well as South America. So that's also helping the macro situation with pricing.
Yeah.
But just on the lithium front, to emphasize the choke point is much more on refining capacity than it is on mining. Lithium is actually is very common throughout the world, including in the U.S. and really it's just a very common element on Earth is lithium. So it's much more a question of where's the refining capacity, and can the refining capacity keep up? That's really what matters more than where is the lithium ore. It's everywhere basically. I think that same question also extends to refining of the cathode, and to some degree refining of the anode. And this is why we've at Tesla we're building our lithium refinery capability at Corpus Christi, and our cathode refinery outside Austin. It's worth noting, I hope other companies do the same thing. we'll have by far the most lithium refining capability and the most cathode refining capability in North America. I think probably more than everyone else combined, by a lot. So can other people please do this work? That would be great. We're begging you. we don't want to do it. You know, can someone please, like, instead of making a picture sharing app, please refine lithium, mining and refining, heavy industry. Come on.
It's fun. It's actually fun.
Yeah, exactly. It's real.
You have a
Neat.
customer. We're here, ready to buy.
Yeah, that's
Yeah,
right.
I just want to emphasize, Tesla's not doing this because we want to do it. We have a lot of we have a lot of fish to fry, obviously, but we're doing it because others aren't doing it, and we wish others would do it.
Awesome. Thank you very much. Let's go to Emmanuel Rosner from Deutsche Bank. Hey, Emmanuel,
Hey, can you hear me?
Yeah, we can.
Yep. Perfect. Thank you so much for taking my question. Maybe a first question for Elon on your pricing strategy. So if I understand your message, you're saying, Tesla feels it's worth maximizing the volume, increasing the size of the fleet as fast as you can, because you'll be able to monetize this over the life cycle of the vehicle. Can you be a little bit more specific around ways you would be able to monetize sort of like this existing fleet in the future? Obviously, I think autonomous seems to be a big piece of it. My understanding was that robotaxi would probably be for the next generation vehicle, not the existing one. So I guess in which ways would you monetize it?
Sorry, the robotaxi terminology can be a bit confusing because that's sort of like a generic term for our next generation vehicle. And we obviously are working on next generation vehicle. It's going to be very compelling. This is just not the time to talk about it in detail as a product. So we internally call it robotaxi, but really all of the vehicles that have hardware 3, which is the vast majority of our fleet, we believe will achieve full autonomy. So they will be a robot, like a Model 3 or Model Y would be a robotaxi, a robotic taxi. So yeah, that's to the best of my knowledge that we believe the current hardware can achieve full autonomy.
Understood. And then maybe a question for Zach, back on the automotive gross margin. So I guess a few months ago, even after major price cuts, you felt pretty strongly that 20% automotive gross margin was still probably a reasonable floor. Obviously, the macro has gone worse, and additional price cuts have happened. Is there anything else that has changed in terms of the outlook? Is it just the macro deteriorating? Is it the competitive landscape? Anything else that sort of like makes you think differently around the full year? And is there a way therefore to frame a floor?
Yeah. About half of the miss against that previous conversation last quarter is attributed to adjustments we made in pricing in the second half of the quarter. I guess you could argue that lowers the floor in a sense. We've also made pricing adjustments so far this quarter, so that brings it down further. About the other half of the miss in Q1 was attributed to things that are non-recurring. So I mentioned these in my opening remarks. It's a warranty adjustment for cars that were previously produced, but not part of the pedigree of cars we're building now. And some autopilot-related deferrals as we make some technology changes here that those deferrals should get recognized once some of the software catches up. So those two things are non-repeating. So hopefully that helps answer your question.
Yeah, I mean, there's really two macro factors that are tricky. The biggest being the interest rate. So if there's a very high Fed rate or interest rates are very high, that is every time that the Fed raises interest rates, that's equivalent to increasing the price of a car. It makes the cars less affordable because people are able to buy cars as a function of what they can afford on a monthly basis. So that's so it's just almost directly equivalent to a price increase is any kind of interest rate increase. Then the other factor is whenever there's uncertainty in the economy, people will generally postpone new big new capital purchases like a new car. This is a natural human reaction. So if people are reading about layoffs and whatnot in the press, they're like, well, they might be worried about they might be laid off, so then they'll be naturally a little more hesitant than they would otherwise be to buy a new car. Now this is just the nature of the auto industry. But there will be a tremendous amount of pent up demand for new cars. So, but it goes through cycles.
Thank you. Let's go to Ben Kalo from Baird. Ben, go ahead and unmute.
Hey guys, Elon, when you talk about many fish to fry, you talked about Dojo being a product that you can sell outside of Tesla. How do we rank all the things you have going on, and then in the economic environment? I mean, like heat pumps and everything else you have going on versus investing in the vehicle business, or is that not the right way to look at it?
I'm not sure I fully understand your question, but I'd look at Dojo as like kind of a long shot bet. But if it's a long shot bet that pays off, it'll pay off in a very, very big way. But potentially, potentially in a very, very big way. Like, in the multi-$100-billion level. But the thing with still put it in the long shot category, but long shot with a multi-$100-billion potential outcome. And so it's a bet worth making, but not one you can sort of say like, oh, take it to the bank type of thing. Although these days, take it to the bank, it's maybe not as secure as it used to be. And obviously we're big believers in heat pumps, and that is on our list that over time is to do a really good heat pump for homes and commercial offices and stuff. And we have the technology; it's really good, but it's a back burner item. Our focus is very much on vehicles, autonomy, stationary storage, basically solving sustainable energy and solving autonomy, which would be like I says, solving autonomy. If we're able to have a fleet of several million vehicles that, with a software update, can be potentially worth several times their original value, that will be, if that happens, that will be and I think it will happen. That'll be the biggest asset value increase in history, I think.
Thank you. Just on pricing, a lot of pundits talk about the pie and losing share or gaining share, but how do you guys look at pricing versus the EVs or the ICE vehicles, or does that not come into the equation? Sorry to ask about pricing again. Thank you.
No, and it's really just like we're every day we get a daily real-time update of how many cars were ordered yesterday, how many cars were produced yesterday. We must have if there's a company that's got more real-time data than Tesla, I'm not sure there's any company on earth that has better real-time data than Tesla, except maybe SpaceX, Starlink. So because like we don't have to, for the other car companies, they will make the cars, send them to the dealers, then the dealers will sell the cars, and and then it takes quite a long time for them to get the data back to actually figure out how many cars were sold. Whereas we know how many cars were ordered yesterday throughout the world. So our fingers on the pulse is real time and does not have latency, whereas the other car companies have a lot of latency in their data. as does the government. The government has a lot of latency in their data. So we're just looking at and saying, okay, what does it take to achieve a clearing price for our vehicle production? And then we make a pricing change and we see what happens immediately, and adjust course. So we're adjusting course, and we're thinking about it literally every day, 7 days a week. Every 7 days a week, I look at that email, and so does the rest of the team. And we try to make the least dumb decision that we can. And on balance, I think our decisions are pretty good. Sometimes they'll be, dumb, but on average, they're, I think, better than the rest of industry.
But just to add on the question about EV market share or ICE, this comes up a lot. I think a lot of the public debate is around this concept of EV market share. We don't look at it that way. I mean, we look at it as market share of cars. It's the car market, not the EV market. And actually, the mission of the company requires internal combustion engine cars to be switched over to electric vehicles. So that's what we pay attention to.
Yeah, I've said that last time too. You guys got to stop looking at it as the EV market. It's how many cars are we selling? Just start looking at it that way.
All cars will be EVs. It's gonna. I've said this for a long time. We'll look back. I don't know. Assuming civilization's still around in 20 years, we'll look back on internal combustion engine vehicles the same way we look back on external combustion engine vehicles, which, like a steam engine. A steam engine is an external combustion engine vehicle, and there's still a few around. They're kind of quirky and kind of cool collector's items. That's how gasoline cars will be in the future.
Thank you. Let's go to Colin Rush from Oppenheimer. Colin, go ahead and unmute, please.
Thanks so much, guys. Can you talk a little bit about how much of the actual cost structure is variable, on these vehicles, and if you could give us a range on plus or minus the lithium cost within those contracted volumes that you're seeing?
Well, I think you have to. Again, we'd really love to have a crystal ball here, but we don't have it. Depending on what time scale you're looking at, most of the car is variable. So most of the car cost is variable. So, and probably, if I were to guess, I think we will see improved costs from suppliers. Yeah, I think we will.
Yeah.
That is our expectation.
Yep, and we're already starting to see that. Elon, I think you had mentioned before we anticipated a crash in the lithium prices, and some of that has flowed through by way of lithium carbonate reductions into battery cost. And the same thing will happen with lithium hydroxide. The length of the supply chain matters also, because what we're talking about is very far upstream. So by the time it makes it into the battery that ends up in a car, it'll be several months. But beyond just the commodity pricing, as Zach mentioned earlier, we're also very focused on other metrics that make production very efficient. So, for example, detention and demurrage, air expedites. I think our air expedites are down 90%. Detention and demurrage is down 93% from the peaks. That can be hundreds of thousands of dollars per vehicle. So we're sort of attacking all vectors and becoming very efficient.
Okay. And then my follow-up is really around stationary storage demand on the utility scale. I mean, obviously there's a gigantic queue for interconnection in the U.S. And can you talk about the volume of quotation you're seeing at this point around stationary storage for that renewables queue on a global basis, and how much of that is converting into actual sales?
Drew, you want to take that?
I mean, I don't. That's also not exactly how we look at it, really. We're not we're not engaged in the interconnection queue. Like, we're focused on ramping Megapack as quickly and efficiently as we can, and we have visibility into the pipelines of a variety of different renewable energy and just pure stationary storage developers, and we also develop our own projects. And we're mostly just we're being selective and trying to pick the projects that best fit our mission and our objectives.
Yeah, again, this is not a product call, but we'll have something. I mean, we're making improvements on many fronts, including Megapack. So I think some of those improvements will improve the speed at which you can connect the Megapacks to the grid.
Thank you. The next question is from Mark Delaney from Goldman Sachs.
Yes, good afternoon. Thank you for taking the question. Do you still see 2 million units as an upside case for volume this year? And is the gating factor for reaching 1.8 million or 2 million units in 2023 still supply chain, as was mentioned on your last conference call, or is it more about demand at this point?
Well, you know, if you have a crystal ball, you can lend me back to the crystal ball situation. These are volatile times. From a production standpoint, if things go well, we've got a shot at 2 million vehicles this year. But that is the upside case. And we feel comfortable with 1.8. And we'll just have to see how this year unfolds.
That's helpful. Thanks. And then the company had spoken at the Investor Day and then for the past conference calls about opening up its vehicle charging network. Can you speak to some of the feedback you've been getting from both Tesla owners and non-Tesla owners, and how the ramp of the charging network may progress from here? Thanks.
Drew, you want to take that?
Yeah. So as you may have seen, we opened our first V4 post in Europe and our Magic Dock post in North America in Q1. And that is, indicative of the direction we're heading with, universal compatibility for all vehicles of, no matter where the charge port is, et cetera, in all major markets. And we're going to continue to roll out those sort of improved offerings as we build new stations. We're always balancing like our ability to serve our own customers with our ability to serve new customers when doing that. I think we've been able to balance it rather well. For example, in Europe, 50% of all of our supercharging stations are open to all EVs, and we've been able to do that without any increase in wait times at all for anybody. So we're going to continue to take a similar approach as we do this in North America and China over the coming quarters.
Okay, thank you very much. Let's go to Rod Lache from Wolfe Research.
Hi, everybody. I just wanted to first just follow up on your comments in your letter about leveraging your cost position as others struggle with unit economics, and also taking into account the lifetime revenue, actually in a way that most other automakers will never see, just given your service network and supercharging and other attributes. Can you just maybe give us a sense of how far you'd be willing to take this? Are there brackets around the range of initial margin that you'd be comfortable with? And again, any color that you might provide on the updated range of margins that you'd expect in the auto business?
I think we may have answered this question or tried to answer this question a few times, but it's difficult to say what the margin will be. It depends on what the macroeconomic environment is like, So, for example, if the Fed were to lower the rates, that would be super helpful for demand. If they raise them, that just raises the interest cost that buyers have to pay to buy a car, so it reduces affordability and therefore reduces demand. So it's, but if we look past, say, this year or like go, sometime next year, middle of next year or something, I think things are looking really, I think, like I said, all bets are off if there's some, major geopolitical wild card that turns up. But in the absence of that, I think I would be very optimistic about middle of next year, end of next year.
Yeah, and just to add to Elon's comments, just two other points. What's really important for us this year, in addition to just managing the day-to-day of the business, but is also investing in, as Elon mentions, what 2024 and 2025 will look like. And so, using the cash generated from the sale of products today and reinvesting that this is very important for us. I think that what happens to margins over the next couple of quarters only matters in the context of what that means for our ability to reinvest into 2024 and 2025. And we have a lot of space before that becomes something that we have to revisit our investment plans. And so, we're planning to keep the business healthy. But I just want to caution folks about reading too much into what happens over the near term here, because we're very focused as a company on making sure that when we exit this macroeconomic situation, this company is positioned in the best possible way.
Yeah, exactly.
Just to elaborate on that point, though, the revenue, the long-term lifetime revenue that you're targeting from each vehicle is massive. So if you took that to the extreme, it would seem that you'd be comfortable with a relatively low initial margin. Am I
Correct?
misinterpreting that, or is that exactly right? And
That
just
is exactly right.
okay. And the normally in a recession, when consumers feel less financially secure, actually price elasticity deteriorates. Just based on your pulse taking of the consumer, do you have a view on elasticity of demand?
Well, I can't emphasize enough the whole just fundamental question of affordability. For most people, their ability to buy a car is a function of can they make the monthly payment or not. And so like I said, if interest rates are really high like they are right now, then in some cases people can't get a loan at all. So it's and I think probably banks are pretty not leaning forward in providing loans. I expect these days. So so that's but like there is quite a powerful story here when you going back to something that was alluded to a moment ago or mentioned a moment ago, that Tesla is in a uniquely strong strategic position because we're the only ones making cars that technically we could sell for zero profit for now, and then yield actually tremendous economics in the future, but no, through autonomy. No one else can do that. I'm not sure how many people will appreciate the profundity of what I've just said, but it is extremely significant.
Thank you. Let's go to Adam Jonas from Morgan Stanley.
Hi, everybody. So first, Elon, good luck with tomorrow's launch at Boca Chica. Break a
Thanks.
leg.
We definitely can't have too much luck in the rocket business, that's for sure.
That's incredible. So now that you've gotten to know the Twitter architecture kind of intimately over the past 6 months, what can you tell Tesla stakeholders about how an X.com or super app could be potentially accelerative to Tesla's business model?
Well, I don't know. I guess it could make it potentially make it easier to buy cars. But we are straying somewhat off topic here because this is
okay.
Tesla.
All right.
Do I think there's some benefit? I think probably there's some benefit. Yeah, sure.
I get it, Elon. So just as a follow-up on manufacturing, you're a student of history, and
Yes.
You'll know that back in 1913, Henry Ford introduced the moving assembly line in Highland Park, Michigan, and the price of a Model T, which had already, been undercutting cars around the time, fell another 70 or 80%, and hundreds of rival car companies went bust.
Yeah.
I'm wondering if history is repeating itself here, Elon, and that the recent pattern of cuts with you is way ahead of the cost curve compared to competition, or is this? It seems like it's a calculated strategy, not just in reaction to competition or changing supply demand in the market, but could we catalyze some Darwinian forces in the EV market?
Well, I mean, we're not trying to say take pricing actions in order to be deliberately to deliberately undermine competitors or anything like that. We really don't think about competitors that much. We just look at, do people like our cars? How can we make the product better? Can they afford our cars? And the sort of the things like improving service and whatnot. But like I said, we do have this unique strategic advantage that we have we're making a car that if autonomy pans out, and we think it will, where that asset is actually will be worth a hell of a lot more in the future than it is now. So it is technically possible to sell it at zero profit, but still have the net present value of future cash flows associated with that asset be very significant.
Yeah. And service and charging and insurance and all of these other ongoing revenue streams that other companies don't have.
Yeah.
Certainly, we want all EVs to succeed too. We just want to say that we're not in like some malicious attack to try to just crush everybody.
Definitely not. We're like opening up superchargers. We've made our patents available for free. So it's like we're trying to be helpful here, So we're not out to sort of destroy competitors or anything like that. We're trying to help competitors, frankly, in any way that we can.
Thank you. Let's go to Dan Levi from Barclays.
Hi, good evening. Thank you. First question, you're ramping supply at Austin and Berlin, so wanted to understand just how critical it is to further increase volume at those plants just to get the vertical integration benefits in the face of the sort of market with some demand questions. And just broadly, should we historically you've been operating at the pace at which your supply allows you to produce as opposed to gauging to demand. Should we generally expect that you're going to continue to produce at your whatever the max capacity that you're allowed within your supply constraints, regardless of what the broader economic environment is, just to continue to get that volume out there?
That is, yes. I mean, there could be like obviously a macro shock that is so severe that people just stop buying cars for some reason. But in the absence of that, we will continue to grow output at a rapid clip.
Great, thank you. And then just on the margins associated with Austin and Berlin, you mentioned Austin and Berlin have a margin drag until you reach intended volumes. I don't know if you can disclose what those volumes are. And maybe you could just remind us of what the margin profile of Austin and Berlin will look like versus Shanghai once you get the vertical integration benefits in place.
Well, probably won't have be quite as good as Shanghai. Shanghai is hard to, has a very efficient cost structures. Obviously our lowest cost structure in the world. But we do expect to be make significant improvements in Austin and Berlin, and continue to make improvements in Fremont as well. So yeah,
we've increased, this is Roshan by the way, we increased our localization efforts. So that will then drive down our days on hand requirements. We've made 10% quarter-on-quarter improvement in days on hand. So we'll continue that path as the localization improves.
Okay, thank you very much. And our final question comes from Philippe Houchois from Jefferies.
Yes, good evening. Thanks for taking the question. It's slightly longer term. I completely agree with your comments that we should look at Tesla in terms of auto market share, not EV market share. But I'm just wondering, as you build up the market share globally, is there a limit to the direct selling business model as you practice it? And should we think about going forward, you need to look into the agency or using importers to basically develop market share more smoothly, I guess, globally? And so in other words, is there kind of a sell by date for the direct business model as you practice it today?
It seems to be working well so far.
Because we hear different feedback from customers who miss the human interaction or unhappy with the service, and I'm just wondering if you're seeing some growth pains in there. that would lead you to change? You're not seeing that.
Well, I mean, there are, since we're always going to have some growing pains where, at times, and it depends on which geography we're talking about, where sometimes service is behind sales, sometimes it's ahead of sales. This is, I mean, Tesla's growing, I believe, faster than any company in history that makes a large, complex manufactured object. So, these are, if you're trying to max, it's always difficult to match exponentials. But I think it is helpful to have the feedback loop with a service, because that means we feel the pain of service, and then we can adjust the design to make the car need less service. And I think that gives us the right incentive structure, because the best service is no service. The car doesn't break. And whereas if you have, say, a dealer network that is reliant upon service as a revenue, then you arguably have a misalignment of incentives, where they're making money on service, but actually we want to, the best thing for the consumer is the car doesn't need servicing. So.
Yeah. And in the last front, if I can follow up, have you worked out, I mean, for many of your traditional competitors, a fair amount of profits for them comes from selling spare parts and servicing. You don't have that in your profit structure. And have you worked out how much of a deficit you have compared to your peers?
Yeah, actually, I mean, this one's something I could wax on about for a while, because really people didn't understand that the best short-selling argument against Tesla for the longest time was the fact that Tesla does not have an existing fleet, and that the auto industry, the reason incumbents succeed and newcomers fail, the biggest reason is that the incumbents have a large fleet, and they're able to sell new cars at close to zero margin, and then sell spare parts at a very high margin, sort of, razors and blades type thing. And so the only way to actually succeed, for a newcomer to succeed, is to have a product that is so compelling that people are willing to pay a premium over the incumbent product. And in the absence of electrification and autonomy, I don't think a newcomer can succeed.
Thank you very much, everyone. Unfortunately, that's all the time we have for this quarter. We'll see you again in 3 months from now. Thank you.
Okay, guys, so that is Tesla's earnings report. Stick around. We are going to reroute you to another video talking about one of the better funded account programs out there. And so, yeah, this is about to start up right now. We appreciate everybody joining us. Don't forget to subscribe, guys. We are almost up to 105,000 subscribers, so we're pretty close up there, guys. So again, if you haven't already, hit the subscribe button, hit the notification bell. We certainly appreciate it. And yeah, like I said, guys, we are going to route to a video talking about why traders should use funded account programs. And so we'll see you guys over there. Again, you won't have to go anywhere. As soon as we close down this stream, it should immediately bring you to the new stream, the new premiere, which should be starting right now. Let me make sure. And yeah, guys, like I said, I appreciate everybody joining me here. Let me know what you guys think is going to happen. We're still holding a piece of Tesla. We're very green in it. So again, we'll see what happens here, guys. Again, let me know what you guys think. And yeah, we appreciate the love and support. Let's make sure. Yeah, that video is playing. Again, we are going to redirect you to a completely different video talking about why you should potentially try out a funded account program like Top Step. And so we'll see you guys over there. Y'all be safe. Good luck. We'll see you guys.